Good morning, everybody. Welcome to the first official trading day of September 2024. We are here back once again on another market open. Folks, it is September. It is officially time to get into what I think is the most fun part of the year. September through December has always been one of the most exciting parts of the year for me. You've got Christmas, Halloween, birthdays in October and November. It's usually a fun time. Thanksgiving, obviously. But from a stock market perspective, September and October tend to be a little tricky in terms of dealing with the pain of the volatility that happens in September and October. So although I think it's going to be a very exciting 4 months in terms of everything we got going on, it's going to be a couple of tough 2 months to get through in regards to September and October. But I think once we get through that and deal with some of the macro concerns, election volatility, all that stuff, I forgot we have an election in November. That's going to be insane. Hopefully the rest of the year ends up being okay. Last night on the Monday Future Show, I talked about some of the seasonal problems with September. We're going to review some of the issues with September, what happens in September and October, and what we want to potentially avoid or look out for. But in general, it does seem like September is going to be a little tricky. Now, the interesting thing about this, and we're going to listen to Tom Lee in a second, who was on CNBC this morning, who warned for a 10% pullback, is when Tom Lee, who's the most bullish of bulls, says, yeah, I think we're going to get 10% pullback. That could indicate, all right, so if the bulls are capitulating here in terms of what September's volatility is going to look like, then maybe we need to take September seriously. However, based on just the early comments I saw from Twitter this morning after pointing out, what September could look like, almost everyone is in consensus that September is going to be bad. And usually when everyone is in, the opposite tends to happen. We saw back in August 5th, no one thought that there would be a 10% drawdown. No one thought the Japanese carry-on trade would come out of nowhere. But then we had a 10% drawdown. That dip was bottomed up. I think now that kind of everyone, including myself, is expecting some real volatility in September, maybe that doesn't happen. So we'll see what ends up playing out. But maybe consensus actually doesn't end up being what materializes into reality. And if it does, I think there's going to be some juicy opportunities to end up buying the dip. So we're going to talk about all of that and go deeper into the headlines today. GE, Broccoli Bob, Aaron, Martin, I'm Beneficial, Eddie, Chana, Gary. Amit has lost the concept of time again. We couldn't be early on the first trading day of September. We had to be a little late. We had to be 1 minute late. Dougie, what's up? Dallas, Kevin, Sam, hello. Thank you for being here. Josh Franklin, Rob, Brad, Appeal, Mark LeBlanc, Gene, Sanjay. Thank you, everybody, for being here this morning. First of all, I missed you guys. All right. I hope you missed me as well, but I definitely missed you guys. And I missed you guys because, dude, we needed the market to be open. Yesterday, I was so excited to stream last night because I was like, finally, we get to talk about some stuff. I'm not in the camp that thinks it's fun to go touch grass. I know a lot of people yesterday on Twitter, when I was like, I missed the green and red candles, they were like, oh, forget the green and red candles. You need to touch grass. I'm like, dude, touching grass is not as fun as people think. You go outside, you touch first of all, I go on walks. Okay. I go on walks every day. There's a nice little lake behind my house. There's fucking rabbits running around. I see the grass. Okay. I want to see the dollar signs. I don't give a fuck about the grass. I care about my money compounding, and I care about this bull market run. Unfortunately, Tom Lee thinks it's going to be a little tough in September to get that bull market run. Let's hear from him, and then we'll keep going from there.
This call for the markets on the first trading day of September is Tom Lee, managing partner and head of research at Fundstrat Global Advisors, as well as a CNBC contributor. And all along, Tom, when you've made these prescient calls, some of them even short term, it had to do with positive surprises on inflation. And is that going to be enough from here on out to keep the market headed higher, or have we shifted to growth worries now?
I think there's probably more growth worries in people's minds these days. So the jobs reports and claims seem to have more market reaction. I think that's going to be the case in September as well. We have the Fed meeting sort of in the middle of the month, but this week is the jobs report. I'm sure there's gonna be a lot of focus on that.
Right. So what kept you positive was that the numbers were always, for the market, they were better than people were thinking. Is that going to continue to be the case? But it's no longer inflation, it's now growth. So growth will continue pretty good. Jobs will continue pretty good. You're not worried about another growth scare like we had 6 weeks ago?
Yes, I think that there the growth scare is what everyone's worried about, because the July jobs report was kind of a shock to markets, and that's part of how we had that Tokyo Black Monday. I think this jobs report for August is going to show a nice rebound for growth in jobs. Hopefully it's not too strong, because of course, as you know, if it's too strong, people are going to worry the Fed might backpedal on a September cut.
Now, notice what he just said there. Okay, notice what he just said. Tom's like, hey, I hope the jobs report is good, because that takes away the fears of a recession. And we'll talk a little bit more about some insights on the non-farm payrolls from Citibank and the report they put out this morning. But he says if it's too good, then it's like, do we need to cut, right? Is inflation going to start reaccelerating? Because if obviously people have jobs, they're going to be spending more money. They spend more money, that leads to inflation. So we really need a Goldilocks job report on September 6th. We need not too good, not too bad, because that will allow the market to ultimately price in an effective rate cutting cycle without pricing in a recession or the reacceleration of inflation.
So where does that leave you in terms of what is seasonally, Andrew just alluded to it, September's not great. And we know, I mean, we always make lows in October, or we have many, many times, which means usually a lot of times September was not great.
I think investors should be cautious for the next 8 weeks. You know, September.
Next 8 weeks, be cautious.
Yes.
You're not always cautious.
That's right. When market's been up 7 of the 8 months this year, so we know it's an incredibly strong market. But we also have the September cuts, and we have the election, things that'll get people nervous. I think in the next 8 weeks, people get a chance to buy. So I think it's good to be cautious, but just ready to buy that dip.
You have, because you're fearless and you'll say anything, you have in the past actually talked about election-related trades and Trump trades. And did you see anything going on now that indicates anything to you? Bitcoin hasn't been acting very well.
Yeah, Bitcoin hasn't acted well. The two things we're watching to sort of look at how election probabilities are weighed is Bitcoin and energy. I think the fact that oil is being weak, even with some geopolitical risks, tells me I think the market is starting to bet more on a Trump election. But
because there'd be more production. Bad
yes.
for price, which is
We'll talk about oil in a bit, but as you can see right here on the screen, WTI crude at 72 bucks, it's down another 2%. I think it's very interesting. Either the administration is doing something to lower oil prices, which tends to happen in an election year. I tweeted yesterday, if you guys saw on my Twitter, gas in New Jersey, I finally saw at $2.93. This is it right here. I have not seen $2 in so long. Convenient that it's happening right before the election, or the market's lowering prices because they think, hey, we're about to get a crap ton of supply once Trump gets elected. So the oil markets might be signaling that that they expect Trump to win because they believe the price of oil should go down if you start to drill, baby, drill.
It's not necessarily the way that you might think about things, because we hear about, we're at records for oil production. No one realizes the reason we're at records in this country is because prices were so high that it caused a lot more drilling and activity, and the prices were high because it's harder to drill without an LNG and everything else the Biden administration did.
Yeah, that's right. So people think oil should be higher here for many reasons, but oil's been weak. So I'd say that's probably the market.
China too, though, isn't it?
Yeah, China's becoming a bit more mysterious, right? There's even risk maybe of negative GDP there.
Okay, so the next, and funny you said 8 weeks. It's almost exactly 8 weeks, I think. What's that? It's like 63 days or so. So some uncertainty and caution going into the election, but in your view, people should get long.
I think they'll get a chance to buy long, yeah. So I think this is one of those where investors need to be cautious, but in the back of their minds know this is a strong market.
How far down, Tom? 10%?
I think that 7 to 10 is a possibility. And we've already had 2 7% corrections.
So Tom Lee saying, hey, I think we could see another 10% correction. There he is. But he obviously thinks that it would be a buy the dip.
Sure. So it's been testing investors' patience. But I think, we should expect turbulence.
And then the question, of course, is when the turbulence comes, is it a buy the dip always?
I think,
or is there going to be and by the way, buy the dip at when it goes down by 2 or 3%, or you really actually have to wait for a 5, 6, 7% pullback?
I think 1 or 2 is just almost like daily noise. This market has shown, pullbacks like that. So I think something like a 5% pullback is very likely, but I think we do.
And are you waiting for that?
Yeah, I think You know what? We'll find out this jobs report, because like if it's too strong and investors worry, and so the stock market's down Friday, I would be buying that dip. But there's a chance that we get a good jobs report and the market's up. I hate to sound so binary, but I think I would just say at the bottom line is it's a strong market. So I don't think this is we've seen the top for 2024. It's just that the next 8 weeks are tougher.
So, okay. I mean, let's analyze what Lee says right there and then go a little bit deeper into some of the macro analysis. First of all, September 6th, this Friday, is going to be very important. I will be live at 8:20, so not at 8:45. I'll be live 25 minutes earlier because we get the August jobs report, and that will be at 8:30, and that number is going to determine pretty much everything. So that's going to be really important to break down. Then at 5:15, I'll be live at 3:45 for the market close. We get to figure out if Palantir gets included into the S&P 500. I have a video coming out on that a little bit later today around the implications of and the possibilities of getting into the S&P 500. But Friday is going to be a big day for Palantir investors and the broader stock market. Now, in terms of what Tom Lee said about this jobs report, we'll talk more about the jobs report in a second. But if we were to get a 10% correction in the broader S&P 500, that drawdown, if prices simply correlated with the August 5th 10% drawdown in terms of volatility, which I don't think it would be an exact correlation, but let's say it's in this ballpark, Palantir would be $20, Nvda 90, Robinhood 14, S&P 507, QQQ 420, Eli Lilly would be 700, Tesla would be closer to 185. Like, if we do get a real 10% drawdown, do any of these prices make sense? Hood at 14 doesn't make sense. Palantir at 20, I mean, I'm going to be buying a lot of Palantir at 20 if we get a chance to get Palantir at 20 again. Nvidia at 90, I mean, look, I could see that happening. I just think people would get really excited because then the EPS estimates based on the guidance that they gave into Q3 would also get more enticing to buy up. So you would get more people buying that dip. Eli Lilly just basically proved they're going to be the world's first $1 trillion pharmaceutical company, and that Ozempic's demand is just like insane. There was an article out the other day that Ozempic could cure I think it was Alzheimer's or something. Like, they're finding all these different use cases for Ozempic. It's like the Nvda of drugs or something. So my point is, none of these stocks trading at those levels, given their earnings growth, would make sense outside of a recession, that's why September 6th is so important. If it's just a correction of 10%, it's going to be a great dip to buy. Just like September, October 2023 was. You know, September 2023 or October, I remember going to Vegas for my birthday, and I was at Vegas, and this was like during that Halloween weekend. And I remember looking at the portfolio on Friday. This is when Enphase actually fell to like $75. And my portfolio, like, it hit a low that was similar to 2022. And I was just like, what is going on, dude? 2023 has been a decent year. Why is the portfolio, like, almost the entire year's gains were destroyed in October of 2023. And I remember like being in Vegas, just like feeling poor. I'm like, yo, I felt rich before I went to Vegas. And now in a matter of a couple of days, like, the whole portfolios got nuked. And then within a matter of 2 weeks into mid-November, portfolios right back to all-time highs. And it was really, I'm sure everyone kind of experienced this as well. The reason was there was some seasonal volatility in September and October, and I didn't really buy that dip, quite frankly. Like, as soon as I broke even on some of these names, I actually got out of certain positions, when in reality, I should have just kept those and let it continue to appreciate. So if history is any judge, September, October is a time, if there is not an impending recession, which again, that September 6th data will give us more insight on, to buy the dip. Because it's seasonal weakness for a variety of reasons, but it's not seasonal weakness that necessarily leads to a massive downside unless we price in a recession. A couple of other charts I want to show, then we'll talk about non-farm payrolls. So 2024 and 2023, given I was just talking about September, October 2023, look quite familiar. On September 2nd, 2023, the S&P 500 was up 17.6% year to date. On September 2nd, 2024, yesterday, the S&P 500 was up 18.4% year to date. So again, if history is any judge and we end up being like 2023, we're going to have some downside momentum in October and September, and we're going to see a little bit of bottoming. And then we're probably look at this chart right here. Just like August, we had that bottom. This is what happened in 2023. In November, you had that little bottom right before the election. I would imagine that could happen again. And if that does happen again, it ends the year much higher as we get into the end of December. So I'm on the camp that says if the jobs data is good, we buy the dip. If the jobs data is bad, then you have to start hedging and be a little bit more concerned. I do think the jobs data will be good, and we'll talk about why in a second. But I mean, if we get Palantir at $20 again, like, that's just very exciting. Now, the counter argument to all of this is that if we were to get these astronomically amazing prices, Robinhood at 14, and again, these are incredible prices. Palantir is $4 billion in cash. At $20, the enterprise value would be closer to $35 billion, growing at almost 30% year over year. That doesn't make sense. Robinhood enterprise value would be like $9 billion, growing at 40% year over year if it was priced at 14. Like, none of these prices would make any sense. I would be very excited to get in if we don't have a recession. But because I would be so excited to get in, I'm sure a lot of other people will be excited to get in. I don't know if we're going to get those prices, right? Like, the idea is that you kind of get a little wick all the way down when you don't expect it. If everyone's expecting it, then maybe we don't end up getting some of those prices that people would love to get. So this is what Citibank said about non-farm payrolls. They believe that they think we're going to get 125,000 new jobs on September 6th for the month of August. I think in July it was 114,000. That's why the markets freaked out on August 2nd last month. And an unemployment rate of 4.3%. According to Citi, the pivot from inflation to jobs is complete, signaling a shift in focus from inflation metrics to employment data in determining Federal Reserve policy. I agree with this. Just looking at energy prices and looking at the other metrics when it comes to inflation, it does look like we are not concerned anymore about inflation accelerating. We're concerned about jobs not deteriorating to the point where we would have to price in a recession. Now, there is a risk inflation could reaccelerate, but I think that risk is not as high as the risk of a recession if we don't have strong jobs growth. So the note indicates that if unemployment rate drops slightly to 4.2%, the Fed might opt for a smaller 25 basis point cut. I would love if we had unemployment go down 4.2%, because I think inflation is dead. Or inflation, let me not say that. I think inflation is on its way to start going down aggressively. It's not dead. There's any chance it can reaccelerate, but I would much rather have unemployment go down and inflation maybe slightly accelerate or stay flat versus unemployment go up, because if people don't have jobs, they don't have money, they can't spend, earnings growth suffers, we're done. Like, you just can't justify paying some of the multiples that we're paying on the S&P 500 and the rest of the broader market if people don't have jobs. So I would rather have unemployment come down versus inflation necessarily go down quicker than unemployment. Citi states that relatively small differences in Friday's jobs readings could materially affect Fed policy. For instance, they believe that if unemployment rate holds steady at 4.3, while payrolls are healthier at around 175,000, the Fed is still likely to implement a 50 basis point rate cut, basically saying, hey, if unemployment doesn't go down, the Fed is going to get scared and they're probably going to cut by 50 basis points, even if payrolls are healthy at 175,000. If we get to 200,000, I think that would be amazing, but 175,000 would not be bad either. Conversely, if payrolls fall below 124,000 or 125,000 with 4.2% unemployment rate, a larger cut could be on the table as well, because you're having less jobs growth. They finally said, we know from past cycles that once the cycle begins, it always has progressed to a U.S. recession. The jobs report Friday, as well as JOLTS on Wednesday, will help us assess whether this progression can continue. Again, that last sentence they said about unemployment leading to a recession, it is scary, dude. I'm not going to lie. It is scary, because once a recession starts to get priced in and unemployment starts to tick up to the point where everyone knows it's obvious that people are losing their jobs. And I know a lot of people in the chat have messaged me saying, like, hey, I work at a retailer. Hey, I work in tech, and we're seeing different layoffs here and there. So anecdotally, I think a lot of people are feeling that a recession might be on the way. I look at the aggregate data, and it doesn't look like a recession is necessarily here given consumer spending. But again, that's the divergence that everyone's trying to figure out. If we do start pricing in higher unemployment, the bull run of 2024 just doesn't end up materializing because you have a recession. And again, it's not complicated. If people don't have jobs, they can't pay for stuff, and the market's not going to price in that future growth. So I think the jobs data is going to be good. I think the jobs data is not going to be as bad as some people think, as definitely is not as bad as some of the bears think. And as a result of that, I think that's going to keep the bull market alive. But I cannot understate how important September 6th is going to be for the broader equity markets, making sure jobs are okay. Now, if jobs data is good but not great, and we get a decline on that jobs data, but we don't price in a recession, I don't think you buy the dip that day. I think you kind of wait it out and see how the market thinks of it. For example, let's say we had 125,000 jobs, market falls 3% because they're super afraid, kind of resemblance of August 2nd. I think you don't buy that dip immediately. I think you kind of wait it out and see how is the market really internalizing this dip. What does JP Morgan say? What does Goldman Sachs say? All these S&P 500 targets at 56, 5,700, do those go down to 52, 5,300 based on the idea that earnings per share growth is not going to be as high as we thought it was going to be? Like, I think there needs to be a decent amount of momentum from the broader market to price in what they think is going to happen on that jobs report. And then from that jobs report, you'll make a decision on if you think it's a good dip to buy. Now, if we get a 10% dip with no recession, I think that's an exciting dip. But the question is going to be, if it ends up being that bad. Addie says, why does employment numbers matter when the government can revise numbers in 2 to 3 months? I agree. Look, I like the BLS revision on jobs is definitely not an encouraging thing to see. But at this point, I think it's all going to be about how the market prices in this data. Meaning, is the market going to believe that the jobs data is so fake that they just don't care about it anymore? No, not really. I think the market is still pretty much going to believe that the jobs data matters and that the jobs data is important at the end of the day. Which means all we can do is deal with the data that we have. And if the market has not totally forego trust in the BLS job data and the revisions, then they're going to price in a recession or not price in a recession based on this data. And, we're going to have to see how that ends up playing out. So, by the way, if we do get a revision, I don't think the revision is going to be that dramatic because we already took away 818,000 jobs. So we'll see. I mean, maybe the revision is dramatic and it's bad for the broader economy, but we can only go on the data that we have, not on the revisions. If you hate the jobs data, you don't believe in it, then you get out of the markets, right? Then you have to make that decision. But if you think it's somewhat accurate, then that's how you judge based on that. In terms of the data not being the best, I talked about this on Friday, but I agree. I'm very sympathetic to people who don't trust the jobs data. Don't have that much sympathy for people that don't trust the retail sales data or core PCE. Like those are things outside of shelter that's lagging. You can't kind of fabricate, right? Like energy coming down, you can't make that up. Like if energy is coming down, it's coming down. If energy is going up, it's going up. And we've seen inflation was really sticky for the first 5 months of the year, and there was no fabrication of that data, right? Like inflation was sticky. So I think inflation is a much more accurate reading, even though it's not the best methodology. Jobs definitely needs to be revamped in terms of its methodology. But I think at least from an inflation perspective, we can see it coming down a little bit more. Even if jobs growth isn't as good as it was back in 2022. Justin says, OMG, Amit talking faster than I've ever heard. That was an all-time fast. I hope it was clear. Sometimes I like there's a little bit of a high, given I'm a former debater, when you talk really fast, but everyone can understand what you're saying. Meaning, so you talk fast, but there's no hiccups in your speed of talking, so that it's still clear, but it's fast. So let me know if you could understand it, because as long as you understand it, that's all that matters, and that'll make me very happy. Okay, so that was the update in the context of the macro. Unemployment data coming on Wednesday with the JOLTS report. Then we have the jobs report on Friday. Tom Lee thinks we're going to get a 10% correction. If that happens, I think that's a buy the dip if we don't have a recession. If we don't have a recession, I think the bull run stays intact. The jobs data, maybe it's not the best in terms of its methodology, but it's the best thing that we have to go off on. Citibank says, hey, we think the unemployment rate could go down 4.2%. The Fed could cut by 50 basis points. I think the broader thesis of staying in this market has not gone away. But September 6th, like if we add 50,000 jobs, GG, it's over, right? Like, then the whole thesis is gone. But I don't think that's going to happen. So September 6th, we'll see what happens. But if it's good, then it's going to be in a decent situation, and we're going to be able to see more momentum for the broader market. And I think that's a dip that ends up being bought. Let's talk about Tesla. So we got some updates in the world of Tesla. Tesla China deliveries rise for a second consecutive month in August on a subsidy boost. Tesla delivered 86,000 vehicles in China in August, up 3% year over year, with domestic sales exceeding 63,000 units. The Model Y led the market with over 45,000 units sold, making it the best-selling new energy vehicle for over the month. This is the second straight month of increased shipments for Tesla in China, making August the company's second best month for 2024. The rise in deliveries is largely due to China doubling its subsidy for trading in older cars for electric vehicles. Meanwhile, in Norway, 94% of the 11,000 cars sold in August were electric, led by the Tesla Model Y. This is from Bloomberg on the Tesla increases in China factory shipments. So one of the big themes I've seen every time we cover Tesla on the channel over the past couple of weeks has pretty much been China and Tesla having a lot more momentum versus in Europe. Europe, Tesla has been trading at all-time lows in terms of the number of vehicle registrations. We saw May 2023. It's at its lowest level, so it's basically down 35%. But in China, it's doing great. Insurance numbers are doing great, and then overall vehicle registrations are doing great in the context of China. So I think 1010, which we're only a month away from, we haven't got the influencer like invitations yet, or the analyst invitations yet. Like, the big Tesla people, they haven't said, hey, here's my 1010 innovation. It's a 1010 invitation. It's going to be at this this part of Texas or whatever. We haven't seen those come out yet. I would hope we're, a little bit over a month away. We start getting those invitations and we start seeing people officially say 1010 is happening. If it doesn't happen, that's not going to be good for Tesla. But if it does happen, I think it's going to be really exciting. And I think Tesla is going to do what they need to do to continue to show momentum in the context of FSD. One other thing that happened, not literally for Tesla, but with Starlink, is Elon posted an update of the amount of satellites that are being launched by Starlink. I'm scrolling through his Twitter right now to pull it up. Elon has been tweeting a lot over the weekend, given Brazil and their ban on Twitter and some of the political stuff he's been talking about. But this I just thought was absolutely incredible. Starlink right here is the only high bandwidth internet system that covers all of the Earth. It will probably deliver over 90% of all space-based internet traffic next year. There are 6,350 Starlink satellites in orbit. 6,290 of them are working and they're orbiting approximately 342 miles above Earth. So I think it's showing you the speed of execution and the depth of execution that Elon is engaging in when it comes to SpaceX and Starlink. If anything, I think 2 points of analysis here. Number one, it shows that, if he's been able to do this with Starlink and SpaceX, you would imagine he's able to execute on the context of FSD. It's just a slow, gradual grind until it becomes really exponential, which is what we're seeing with these satellites here in space. Number two, and I've been saying this for a while, Tesla or Twitter has a decent amount of debt. Elon has to make a decent amount of debt payments. I think it's very important that Starlink continues to succeed and SpaceX, because if it doesn't, Elon's going to be selling Tesla stock. And you don't want Elon selling Tesla stock again. Now, I know he promised he wasn't going to sell Tesla stock, but if push comes to shove, he just got paid a very big compensation package. I know some of those shares he can't sell, but he has other shares he can sell. You don't want to see him selling Tesla stock. And in order for him to not sell, other companies should be doing well. I do think there's a world in which he's going to have to liquidate some of his private holdings to be able to keep Twitter afloat, especially with the loss of revenue that's going on, the Brazil ban, all that stuff. So I'd rather he sell SpaceX than Tesla, right? Because Tesla is a public company. So we'll see what ends up going on there. But that 10-10 event for Tesla is going to be very important. Tesla right here up about 1% in the pre-market. So what do we got going on the first day of September? We do have some red. Intel, we have some news on Intel. We talked about them last week. They're up about 10% from last week. They're down 1% on the day. Does look like investment bankers are taking over the company and they're going to reorganize how the company is formulated. I don't think that's the best thing for, in general, the growth prospects of the company, but hopefully there is some, activism that is internal. Pat Gelsinger probably not really showing enough confidence to investors, and that's why they're bringing in JP Morgan and Goldman Sachs. But, investors either are going to get the benefit of that or not going to get the benefit of that. But that's down 1% right now, and it's lagging from a lot of the semis. SMCI down about 0.5%. Dell down about 1%. Nvda down 2.3% at 116. It would not surprise me to see Nvda go back down to 105. Would not surprise me to see it go down to 100 or 105 just based on the seasonal volatility. Do I think that's a buy the dip? I think yes, but I think 90 is where people get a lot more excited. Also, 90 is support from the last time it had a 10% correction. Well, for Nvidia, it would be more like 30% correction. But if it gets to 100 and 105, I mean, selling puts there gets even more attractive, right? Like if you are bullish on Nvidia, and we'll talk more about Nvidia in a bit, then I think selling puts to scale into the position makes sense, but you don't have to be that aggressive. You can be very conservative, still get a healthy 0.5 or 1% return over a month, and then, only have to buy it if it actually falls 10 or 15% or even 20, 30% from the strike that you pick. Robinhood 1973. Robinhood is another one. I do think Robinhood will go down this September. Why? Because if the broader market goes down, well, Robinhood is going to go down as well. Robinhood is a bull call in the market. I will be buying the dip on Robinhood if we go back to 15, 16, even if we go back to 17, but we're going to have to see how it plays out. SoFi down about 1.38%. SoFi as well. It should benefit from rate cuts, but it's not going to benefit from a 10% correction in the broader market. So SoFi probably should have some volatility. Now, Palantir is going to be interesting. Palantir at 31.27. I talked about it on the S&P 500 video. I'll go deeper in a second on Palantir, but in general, I think Palantir holding $30 right here. Actually, let me just talk about it right now. Let's do a little segment here. I think Palantir holding $20 or $30 right now might be the S&P 500 inclusion run up that everyone's thinking about. What do I mean by that? So when Tesla got included into the S&P 500, it went up like 30% in December of 2020 or like in June of 2020, and then it got included in December. So you saw a 30 to 40% run up in the stock price, even after the stock had done so well in 2019 after the pandemic. Palantir, a lot of people ask me every day, how is it holding $70 billion market cap? How is it trading at a 185 PE? How is it trading at a 33 times price to sales? How does this make any sense? And, there's a lot of different ways you can answer it, but one of the ways might be Palantir is about to get into the S&P 500 on Friday. And because they're about to get into the S&P 500 on Friday, this holding of the stock above $30, those are institutional investors that are like wanting to give Palantir extra momentum because they think it's about to be included into the index, which is one way to justify the advanced premium that Palantir has gotten. Because, again, there's two ways to justify it. Reaccelerating growth, or three ways. The only AI SaaS play. And then third, is CARP, and CARP is cool. And at the end of the day, people want to invest in something that is cool. Those are three simple explanations. A more complicated explanation is that if we're about to get into the S&P 500, there's usually a pump that happens. Then there's a dump that happens after you get into the S&P 500. But that pump going into it might be institutional investors getting excited for Palantir potentially getting included. September 6th, this Friday at 5:15 p.m., I can guarantee the website will crash like it crashes every time. We're going to be trying to figure out if we get into the S&P 500. Maybe that is an explanation. Now, again, I go deeper on the video today for Daily Palantir discussing it, but I'm skeptical because of the institutional ownership. However, if I'm the S&P 500 committee and the whole idea is to pick the best 500 companies on the planet to be included in the index, I don't see how a serious person doesn't look at Palantir, given the gap profitability, given the thematic of AI that's actually being useful, meaning AI is providing value to enterprises. I know that's going a little bit deeper into the thesis, but you would imagine some of these people in the committee at least look at the thesis of the company. I don't know how you honestly look in the mirror and say Palantir is not one of the top 500 companies on the planet right now. It seems obvious to me. It's worth more than most companies on the planet at $70 billion. Even if it went down to $50 billion, it's still one of the most amazing companies on the market. So from that perspective, I think if they're serious about their requirements, they would put Palantir into the S&P 500. The part I'm scared about is that the institutional ownership is only 44.15%. And because that institutional ownership is not 60 to 80%, which is what the benchmark is for S&P 500 companies, they're going to be so afraid of the volatility of Palantir, given retail investors control the name versus institutional investors, that they're not going to include it into the index. Now, what's funny about that is they allowed SMCI and CrowdStrike to be included into the S&P 500 over the past 6 months. SMCI is down over 50%. CrowdStrike at one point was down over 50%. Now it's down 20%. And it had an event that, totally shut down the world for a good couple hours, and then certain companies for a couple of days. So it's not like the safe options like SMCI or CrowdStrike. CrowdStrike has 82% institutional holdings. SMCI has 60%. Or that's safe just because they have institutional holdings at a high level. I mean, at the end of the day, they're companies, and companies make mistakes and they can mess up. So do I think they get in? I'm skeptical because of the institutional ownership, but do I think they deserve to get in? 1000%. It's just, I'm not on the committee, and I don't get the final say. Now, if I was on the committee, obviously I would, I would not let the room leave until we made it pretty clear that Palantir, the Fed has those 12 presidents. They all have to agree on a rate cut before they can officially announce it. I would be one of the guys that's like, guys, I'm not leaving. I would handcuff myself to the door. I'm like, guys, we're not leaving until we agree. I am not leaving until we agree that we're doing this damn rate cut. So that's what I would do, but I'm not on the committee, so I can't make the decision. Nonetheless, I think it'll be exciting to see what happens September 6th, and at 5:15, we're going to see how this ends up playing out. What else do we have going on in the pre-markets? Walmart is up. GameStop is up 1.28%. Interesting that GameStop's up amidst the volatility. I don't know if anything's brewing there. It was up 5% yesterday on Robinhood's overnight trading, but GameStop getting a little bit of momentum. IWM, unfortunately, I don't know if this bad boy does what Tom Lee says it's going to do in September, October, maybe November, December, when we prove we're not having a recession and the broadening of the market continues to happen. Maybe then it runs up 40%, but if it doesn't, then I think it's going to be in a little bit of a tough situation. Best Buy right here down about 0.4%, Amazon down about 0.62%, and then Tesla up a little bit in the pre-markets. Intel down 1%, Dell again down 0.64%, QQQ is down about 0.61%. Affirm, I talked about them last night. I was listening to their earnings call on Friday. The reason they're up 35% is A, they're going to be gap profitable. B, Apple decided that buy now, pay later is not a metric they can succeed in. So they're conceding to Affirm. C, rate cuts are really bullish for their approval rates when it comes to people getting a loan. And then a D, they have exceptional underwriting. So this is a stock that you shouldn't see up 35% if we're headed into a recession. Now, maybe the street is just getting super exuberant and there is a recession coming up and they're afraid of, and they're just buying up a firm to buy it. But I do think the street knows a little bit better than to buy a firm heading into a recession. So I think the street's not really expecting some massive recession. And that's why a firm is gaining some momentum. And then we got the S&P 500 right here at 560 on the day. Let me do a poll right now on YouTube to see what people think on if we're getting into the S&P 500 or not. So let's see what you guys think. Does Palantir get in to SPY 500? Again, I'm just a little skeptical from the institutional ownership angle, but you never know, man. I mean, maybe there is a legitimate argument that Palantir holding this $30 range and this uber premium that it's been able to get over the past couple of weeks is really based on the idea that fund managers are starting to buy in before it gets included into the broader index. Now, you can make the argument that fund managers don't want to buy in because they know there's going to be volatility, and so they think they can get it at a better price, like at $25, $26, maybe. But maybe not. Maybe they all bought in after that earnings because it showed them, all right, Palantir is legitimately the only AI SaaS that matters. And that's where we saw that 40% gain post Q2 earnings. AMD down about 1.4%. CleanSpark, wow, CleanSpark down 5%. Where's Bitcoin? Bitcoin's actually interesting. CleanSpark's down, but Bitcoin's doing okay. Bitcoin 59,243. BitX 2x leverage Bitcoin fund. That one is up about 2% in the pre-markets. Lululemon down a little bit. Open Door down about 1.4%. Home Depot down 0.5%. Lowe's is flat. And then let's look at the Mag 7. Microsoft down, Apple down, Meta down, Google down, Amazon down, Nvda down, Tesla's up. So Tesla's the only one out of the Mag 7 that's actually showing some green. The rest of them are showing red. We have 53% say no. So still 50-50 on yes or no. I'll leave this poll open and we'll see what people say. Cool. So that's what we got in the context of pre-markets and what I think will happen for Palantir. September 20th is the inclusion after the announcement. Correct. So September 6th is the name. September 20th is when September 6th is when they announced it. September 20th is the inclusion. Bonton says, you keep talking about a 10% correction like it is a foregone conclusion. No, not really. I'm saying that there's a chance of a 10% correction based on the historical patterns of what happened in September. And I'm going to show a chart right now that kind of substantiates that September claim. I'm not saying it's a foregone conclusion. I'm actually saying the opposite. I'm saying that because everyone thinks it's a foregone conclusion, it might not be something that happens. But if it does happen, I'm also not going to be the most upset in the world because, again, I was thinking about it this morning after Tom Lee talked about it, and I was like, wait a second. If we get a 10% correction and I get to buy Palantir at 20 and Robinhood at 14, am I really going to be upset? I don't think anyone would really be upset if they get those opportunities again. And that's why I'm actually saying the opposite. I think we might not get that allocation because usually when everyone wants the most juiciest prices, the juiciest prices don't end up happening. So if we don't end up getting it, then it is what it is. But if we do end up getting it, then I think, I just wouldn't be that scared if it ends up happening. So that's my perspective on it. I hope it doesn't happen, but if it does happen, we kind of have to deal with it. Also, I'm unemotional about it. We have an election coming out. That election is going to be one of the most volatile elections we see over the past couple of years. I have no idea who's going to win. Right now, the polls are saying it's 50-50. I mean, we'll end up seeing what happens. I think if Trump wins, the market's going to be excited. I think if Kamala wins, the market's going to be annoyed, but the market's not going to totally tank. I mean, I kind of have no idea. So from that perspective, I hope it's going to be okay. But if it's not, then, we're going to have to end up dealing with it. Okay, so let me see if I can find that chart real quick on September. I thought I had it pulled up, but the point of that chart is showing September 17th to September 30th are the worst days of, well, actually, this is not the same chart, but let me pull up this chart. So September 17th to September 30th are the worst days of every year since 1950 all the way, or since 1928 all the way until 2023. So as you can see, the last 10 days, you have an average downside on the S&P by about 1.13%. And each day you start to see a downside of 0.5, 0.6, 0.7. Then you have a little recovery. Then you go back down, etc. So September is just weak for the S&P 500 for October. Is it 10% weak? I don't know. Tom Lee thinks there's a chance. If it is, I think that's a good buy the dip if there's no recession. If not, then we get to stay okay and things aren't too bad. One chart I did show yesterday was that, so September tends to be bad, but on average in an election year, September ends up being actually not bad. September ends up being up 1%, which is, there's a little part of me that thinks that could happen because we have the rate cut coming up. Oh, here was the chart. So there is a part of me that says right here, September 17th all the way to September 30th, there's your negative days, almost all in a row. You get a little bit days of recovery, but most of it comes down. But in September, on average, in an election year, we tend to be up 0.65% for the month. If that ends up playing out again, then there you go. September might not be as bad as it seems, but we will find out over the next 30 days. Okay, so that's what we got in the context of some of that September analysis. Palantir 20 would be a 30% drawdown. Yes. So 10% on the indices is what I'm talking about. Individual stocks would be down 30 to 40%. And I'm only saying that because that's what we saw last time we had a 10% drawdown on August 5th. But in general, when you get a 10% drawdown, you tend to see some pain, right? And so that pain would be a lot more than 10% on individual names. But, we're going to have to see how it plays out over the next 30 days. Let's hear from Gene Munster on Deepwater, what he thinks is going to happen in September and Volatility around tech. And then in about a couple minutes, we will open up the markets for the first day of September 2024.
The tech move from last week. I want to do it with Gene Munster, Deepwater Asset Management managing partner. Good morning to you. Gene, we've been on quite a wild ride when it comes to the NASDAQ and some of these tech stocks. I think there's a question about, given where some of the big tech and AI stocks are right now, whether you're a buyer, whether you're a seller, whether you're a holder.
Andrew, I am a buyer here. I continue to believe we're in the first stage. This may be hard to wrap many heads around. First stage of a 3 to 5 year bull market. There is a headline in the Wall Street Journal today talking about the market is really, really optimistic right now. And I believe we're still just beginning. That typically is a negative sign when you start to see headlines like that. But I do believe, Andrew, that we're going to continue this. And I think September is going to be just an important step towards that 3 to 5 year bull market. We got, of course, what's going to happen with Apple next Monday. This is the biggest event for Apple in over the past decade, I would say. Second, I think there's going to be a changing view of what over the next month over how investors view Nvda. And last, of course, we have Tesla, the October 10th event. We're going to get some anticipation around that. I think when you put those three kind of cornerstone elements together, I think you're going to continue to see the tech trade move higher in the month of September.
Okay, Gene, let's talk about those three names, though. Let's start with Apple. And there is a view, I think, based on the 30% move on this stock since May, that there's going to be a super cycle style buying pattern around the new phone. Do you believe that this year is that? Do you think that gets pushed out to next year? I asked.
Put in the chat as well, how many people really think there's going to be a super cycle buying pattern on the iPhone? Because again, that's going to determine a lot of the consumer AI adoption, which is going to be important for names like Nvidia as well.
Because it's not clear that all of the sort of AI functionality is going to be embedded in the phone and available this fall.
So it's going to be some bumps, some good, some bad over the first couple quarters, but ultimately I believe that this can go much higher. I think if you look at what happened with the iPhone 6 a decade ago, it was up 12%, with the iPhone 5. The iPhone 6, it was up 52%. It just absolutely ripped, Andrew. So I think that this can certainly move higher. I think that ultimately, we're going to see this big upgrade cycle coming. And a question I'd have for you, Andrew, is do you believe that that these features are going to be exciting enough to move it higher?
I don't know. I'm somebody who oftentimes gets the new phone almost every year. Just I love the products, as you know.
That's definitely something only a rich person would say, dude. If you get the new iPhone every year, you're fucking rich. I'm sorry. That's only rich people say that shit.
And I'm a geek when it comes to this tech. What I don't know is I use ChatGPT and other products like Claude from Anthropic and Google's product as well. And I can do that right now using either their apps or going to their websites. The question is, how integrated ultimately does it have to be into the OS itself? And how, even if it is, it doesn't even sound like it's going to be fundamentally integrated in certain cases, right?
The integration, of course, is going to get rolled over the next year. But I just want to put some context. I mentioned that iPhone 5 to iPhone 6, that massive acceleration in growth rate. And the reason why that's so important, the reason why the iPhone 6 had that breathtaking growth is because it had a feature, the first larger screen that that consumers really got excited about. In the case of these AR features, you are correct. It's going to take a year or so to roll out.
And those features are going to have to be really, really exciting for the broader market to be excited about AI and the iPhone. But if it's there, then I think we will have some more momentum. Here we go. Tuesday, September 3rd, 9:30 a.m. It has been way too long since we've heard the bell. But folks, the stock market is open once again. Wake your ass up. It is September 2024, and we've got to get into what's happening in the broader stock market. 560 on the S&P 500. We open up for the first day of trading down about 0.5%. Bitcoin at 59,000. QQQ down about 0.74%, 472. CrowdStrike 275 down 0.5%. Starbucks 93.73 for all the people that like their pumpkin spice lattes. Those are officially live and ready to go. Amazon at 177. We're going to talk about some Amazon upgrades that they got today to $265 from the street. So the street's obviously starting to pump one of the most undervalued Max 7 names. We'll talk about those. and discuss the logic behind it. Tesla is green, up 1%. Intel down about 2%. Dell is up 1%. SMCI continuing to go down 0.5%. SMCI did say late on Friday that their 10K delay has nothing to do with the material impacts of their numbers. Hopefully the street believes that that's the case, but SMCI right now down at 434. Robinhood down 2%, 1975. Nvda, wow, 114. Nvidia taking a little dippy dip right now, 114, down about 3.9%. Officially down, I believe, basically 9% from that 128 top that it was at right before earnings. So there you go. Nvidia right here at 114. We'll see if any buyers come in and step in. SoFi at 789, Palantir 3128. I think it's going to take a lot to get Palantir below 30. We're going to have to see a decent amount of sell side pressure. Don't know if that's going to be the case, but Palantir right here at 3135. Walmart is green. Lockheed Martin is green. GameStop, risk on asset, is green. Bank of America, green. Warren Buffett did sell a ton of Bank of America last week. Seems like he's really raising a decent amount of cash. But Bank of America is continuing to be green. Snowflake, 113, continuing to fall. Apple, 228. Celsius at 37.50. Upstart at 41. Microsoft at 417. Salesforce at 252. They had a decent earnings, but they're flat after their earnings. IWM down about 0.75. Berkshire Hathaway is green. Makes sense. Market's rotating a little bit from growth to value. Rocket Lab at 622, down about 1%. TQQQ down about 2.6%. MicroStrategy down 1%. Broadcom, earnings this Thursday, going to be very important for Broadcom. People are saying this is actually more important than Nvidia in terms of the broader AI semiconductor supply chain. This one right here down 2.4%. Palo Alto down about 1%. Iren down about 4%. PayPal down about 0.26%. S&P basically staying flat now, down about 0.5% on the day. Not too bad of an open. I mean, we got a long time to go, but the open is not too crazy. Where's Enovix? Enovix is red. Yeah, wow. Novix down 3%. Again, we talked about this one. It was $18 at the top. It's down more than 50%. One of the reasons they're down is because Enovix, to me, is a startup that's public. They have a lot of potential, but you're buying it for the potential. You're not buying it for the financials. They do like a couple million of revenue a quarter, and they're worth $1.63 billion. So it's one of those companies that definitely is one that you believe in for the battery technology potential. TJ Rogers, there's a lot of bullish theses, but I don't think it's something that you expect to, go to the moon overnight. It's much more of a long-term Enphase type of play. Enphase was stuck at $1 for like years before Enphase ran up to $200. So that one's probably going to take a little bit of time. CrowdStrike right here, 276. Amazon at 176. Tesla 218. Wow, Tesla's green. Out of all of the Mag 7, out of all of the red today, Tesla is the only green stock. Does anyone have any theories on why? That's interesting. Wow, Nvidia down 5%. All right, Nvidia's getting dumped. Look at this red candle, bro. No one's stepping in to buy. There's not even a little bit of a break on that red candle. Holy crap. There is zero green. It's just going down. There's the red candle right there. Nope, it went away. It was at 113.50 and then it went right back down. Do you think people are selling Nvidia to buy Tesla before 1010? Maybe that's what's happening. Maybe that's what's happening. CleanSpark's down 7.5%. Okay, so we talked about this last night. The director of CleanSpark, the executive director, chairman, Matt Schultz, came out on Twitter on Friday and basically justified the dilution that they're doing. I don't think the market's happy with it. And so he's like, oh, well, we're not really diluting. We're just giving ourselves the opportunity to dilute in the future. It's like, dude, you're diluting. Like, don't bullshit about it. So this is why CleanSpark is struggling right now. But that's why they're down about 7%, even though Bitcoin is not down as much. And again, the reason the miners are down is because it costs more to mine Bitcoin if Bitcoin's price is not going up post-halving, but the revenue gets cut in half, which obviously is not good for the Bitcoin miners right now. Again, if Bitcoin has a bull run, I think the miners are going to be fine, but in the short term, there is going to be some pain. S&P 500 at 560, Enovix at 917. Nvidia, again, continuing to get hit. A little bit of a green candle right there at 113.8, but still getting a little bit of a hit. Oh, wow. We got Chris CRM in the chat says, I sold Nvidia the other day to buy Tesla. So there you go. That's literally what I just said. Is that happening? We got at least one of you in the chat that says, you know what? I got rid of my Nvidia and I bought some Tesla. Maybe that's a little bit of the rotation we're seeing. Maybe the market's getting excited for FSD. They believe the China registrations were really good. They think Tesla's scaling up. They think Nvidia's short-term growth story is stalling until they have their next catalyst, which is earnings. And the next growth story, because the market's forward-looking, is 1010. And that's going to be kind of maybe where the rotation goes into. Or this could be kind of an algorithmic dump and institutions kind of just offloading a little bit going into September. Remember, a lot of fund managers that were in Italy and Greece in August and really didn't care about the stock market, they're now coming back. They're looking at all the data and they're making allocation decisions. Some of them may be tax loss harvesting. You might be starting that already in September. Some of them just may be taking profits. If you have an Nvidia average at $60 as a fund manager because you were smart enough to buy it at $600 post pre-split in February, you might say, you know what, we're up 90%. We deserve to give money back to our limited partners. We're going to take some profits. So that might be happening right now as well in the context of this little sell-off. Amazon down 1%, Google down 2%. Wow. Google's down 2%. Meta's down about 0.5%. Microsoft's down 0.5%. Apple's down 1%. Tesla right here up 2% on the day. Selling Nvidia to buy GameStop. Oh boy, that would be funny. Where's GameStop? Is it running right now? Is it running? That's actually interesting. That GameStop. Wow, GameStop. I guess people are selling Nvidia to buy GameStop, man. GameStop up 4%, Nvidia down 4%. That is interesting. Palantir holding 31, not too big of a problem. Robin in 1983, not too big of a problem as well. Bank of America at $40.79, Snowflake at $113, Ulta at $353, Dollar General at $83.92. Let me know how many people, or let me know, here's the number I'm curious about. What percentage of allocation are you in cash that you are ready to deploy if we get a decent dip? I just put in $2,000 into my Robinhood account this morning, and I got $20 with that 1% gold match. Again, that feeling never gets old. But I am starting to raise some cash to get when I mean raise cash, I mean like just put cash into my brokerage, not sell anything. Now, at least not sell anything yet. It seems like things are okay. And get ready to buy the dip if things get really bad. But I want a real dip. Like, I don't want Robinhood at like $18. Like, that doesn't get exciting to me. I want to see Robinhood at 15. You know, I want to see Palantir. I don't think we get back to 20, but I want to see Palantir at 21, 23, 24. Like, I want to see a real dip for me to start deploying cash. So I'm curious, what percentage of cash are you, and how are you planning to allocate? I think for me, it's like maybe 5% cash. It's really not a lot. But whatever cash I have, if we get a juicy dip September, October, and we avoid the recession, I think it's time to deploy a little bit. Doug is 10% cash, 35% liquid by Hiren, 50% by Delu. Most of you guys about 10 to 15%. Yeah, most people 10 to 15% cash. Interesting stuff, man. If we're 10 to 15% cash, then the broader market, if it gives us, 30 to 40% corrections on certain names, which sounds crazy, but if it happens, it happens. I think that's going to be a great opportunity. It's just those August 5th opportunities. I don't know if they happen twice in a row, dude. Like, August 5th was VIX went to 65. It was an amazing buying opportunity. I don't know if it's that easy for that to happen again. And if it is, then yeah, I think that's a buy the dip. If it's not that easy, SMCI up 2%, then maybe we're going to have to settle for some higher prices on some of these names. Again, VIX, where's the VIX right now? VIX would have to also spike up for us to see August 5th prices. VIX is up about 5% on the day. Yeah, I mean, again, VIX was up 187% on August 5th. I mean, I don't know if a jobs report is going to be enough to get VIX that high, right? You're probably going to need something happening in Japan or some external black swan event. If not, maybe we don't get those crazy prices. Bitcoin below 59,000, S&P at 559 on the day. And Nvidia still struggling to get a green candle. Nvidia still here at $113.82. Unity's up 9%. Okay, so Unity got upgraded by I think Piper Sandler, one of these firms today. They got upgraded to overweight to like $22. That was the price target. That's why Unity's up right now. Unity, again, it's an interesting company. Their stock-based compensation is disgusting. Their CEO debacle last year was horrible. They're not profitable. And they lowered guidance by $500 million at the end of Q4 2023 for the fiscal year of 2024. So none of the financials are that exciting, but their moat as a essentially duopoly in the video gaming space, them and Unreal Engine, is what potentially gets people excited, I think, to at least think of Nvidia as Unity as an opportunity. But the financials suck. Like, the financials are not exciting at all. And maybe that's why they got upgraded today, because the financials are getting more attractive as they've been beat up like 50% over the past year and a half. But this one is still not that attractive to me given the pain. I mean, look, they were $39 in January. Now they're at $17. So still a decent 50% drawdown. Nvidia right here looks like it's about to go below 113. Wow. It really, yeah, there you go. 112. Wow. It just got flushed out. It just got flushed out hard. Now it's dropping. Wow, dude. It was at 113.50. And then in a second, it fell to 112.73. And there's no green candles helping it. There are no green candles helping it. See, here's the thing now about the dip on Nvidia. The thing now that gets funny is who steps in to buy. Because once a stock really starts falling, this is why it's so hard to buy the dip. You've got to be the guy that looks like an idiot standing on the island saying, oh, Nvidia at 112 sounds like a great deal. And you're probably, for the most part, right, because, dips don't just keep dipping forever. Sometimes they end up dipping forever. But if Nvidia, let's say, goes down to 105, then you feel kind of stupid. And you're like, man, I should have waited. Then when it goes to 105, the people that are laughing at you on the island buying it at 112, they're laughing at you and they're not going to join you on a separate island buying it at 105 because they want to see the sucker go down to 85. And so it creates this perpetual psychological cycle of compounding when people get excited to finally buy in. And then in an instance, you see it start to reverse. And the algos get excited and people realize the pain is done, and then you miss the dip opportunity. And this is what happened on August 5th if you didn't end up buying the dip. If you waited for Robinhood to go to $11 and did it buy it under 15, you missed the dip. Same thing with Palantir. If you waited for it to go to 15 and not buy it at 20, you missed the dip. So I'm curious if that same psychological impact will compound on Nvidia at 112, or if it ends up getting a little bit of green candle and you keep going from there. Tesla just dropped. Did Tesla just go red? Tesla, yeah, there you go. Tesla, look at that red candle on Tesla. So this is the whole market. This is not really a rotation from Nvidia to Tesla. This is the whole market. These are algos basically deciding to dump. Tesla is very close to being red for the day. Robinhood's red. Palantir down 2%, 88 cents away from going below 30. S&P 500 down 1%. Enovix down 4%. Affirm actually holding up is incredible, but Affirm is basically flat on the day. CrowdStrike down about 0.5%. My goal for CrowdStrike is to keep this sucker in the 250 to 280 range for the next 3 quarters. If it can keep growing and it has minimal impact from the Y2K scenario and it stays between 250 and 280, I think I'll have time to actually develop a decent position. And the PE will collapse because they'll have 3 more quarters of growth and people won't be saying it's the most expensive name in software because it'll just stay flat for the next 3 quarters as their growth continues to go higher, even if it's not as high as it was in the past couple of years. So my goal with CrowdStrike is if it can stay between 250 and 280, I would be really excited to establish a real position over the next year. Not just 5 shares, but if it runs up all the way to 320, I'm not going to buy it at that expensive level. I'd rather just buy a cybersecurity ETF, but I would like to have the individual equity in my portfolio if it can stay at these levels. Palantir $30.89. Wow, Nvidia. It bottomed at 112.01. It was a 1 cent away from going below 112. Would be down 6% on the day. Now it's getting a little bit of a green candle right there at 112.50. But let's see if it continues to go down. Matt Money said he bought back my October $124 calls on Nvidia for 55% profit. If you do have covered calls on Nvidia, today is not a horrible day to buy back some of those covered calls. Again, you can give back some of the premium you got from the market, and you can keep, in case of Matt Money, 55% of that premium, and you get to protect your shares. Same thing with covered calls on any stock. I mean, if you have covered calls on Palantir or Tesla, as the stock drops, those covered calls become more lucrative, and you can end up buying them back at hopefully a decent profit. Visa is doing well. Visa. I was listening to MasterCard's earnings last night. I didn't get to finish the call, but they did say the consumer is in a healthy spot, and they said international expansion in Europe is going very well for them. I did not know MasterCard is a $450 billion market cap company, and Visa's $550 billion. Like, we don't talk about MasterCard and Visa now. I mean, these are $500 billion payment companies that are managing trillions of dollars of payment volume per quarter. You could argue these are very, very important companies. And they are growth plays. I mean, they've done well this year. I think Visa's up like 20% and MasterCard's up like 15%. So you had share appreciation with a small dividend, but 2 very important companies that I definitely will be doing some more research on. Palantir at 31.08. So there you go. You got a green candle right back into the 31s. Nvidia got a green candle right back into 113. So now this is the funny part. Was 112 the dip for the day? And now these 2 green candles say we're going back to 115? Or was this just a head fake and we're going to go back down into the 111s and 110s? Like, this is the thing no one knows, right? So right now, if you're on the island and you bought it at 112, you look pretty smart. But do you look pretty stupid in a couple minutes if it comes right back down? This is the pain and the fun of buying the dip, because you got to be willing to deal with the consequences. S&P 500, 559, QQQ at 471, CrowdStrike at 276, PayPal at 72, Broadcom at 158. And then we've got Palantir right here at 31.20, getting a nice green candle as well. Mario says Visa card is 30%. It's my biggest position. Hey, I can't blame you for that. Visa card seems like a Visa as a company seems like a company that's not going away anytime soon. And that's going to be very important. I don't think the blockchain is replacing Visa. So I don't think you have to worry about that. And honestly, just like logically, if everyone uses Visa, even Robinhood's Gold Card is based on Visa. So it seems like a company that will be in demand over the coming decade, even if there is some headwinds in regards to overall payment infrastructure. Okay, let's get an update on Amazon. So Amazon's getting some momentum. Well, I mean, it's down a little bit today, but they got some decent price targets. And I want to talk about some of those price targets, why it's getting that momentum. Let me know in the chat if you are overweight or you have any allocation to Amazon at all. If we do see a 10% correction, the S&P, like Tom Lee says, there's a chance. I think Amazon probably gets back to 150, which is a very exciting buy the dip if we get there. But if not, I think at 170, it still feels a bit undervalued. So Amazon at 230 at Truist, they said, hey, Amazon controls 48% of U.S. e-commerce, normalizing growth for stores, AWS, the ads business, and growing Chinese competition. It has put together the building blocks for its next pillar of growth, supply chain by Amazon. This is an end-to-end logistics platform to help on and off Amazon commerce players run virtually their entire back-end freight and logistics, distribution, replenishment, and last-mile customer delivery from one central hub. I actually haven't heard of that thesis before, but it's a pretty exciting thesis, especially the margins on that, you would imagine, are better than the margins on their traditional retail business. Amazon has a running start given its scale and successful AWS playbook. While still early, this is a $100 billion opportunity for the taking, and we believe Amazon is well positioned to capitalize on that. I think that makes a lot of sense. And I think at the end of the day, the market's going to see some more momentum in the context of what could happen with Amazon, especially if they try to control the end-to-end for supply chains. Then you have JMP Securities also have raised the price target to Amazon to 265. They said, hey, we believe our higher than consensus advertising estimates are reasonable given Amazon's vertically integrated full stack advertising platform, which can serve upper funnel down to lower funnel advertising solutions. Amazon Prime membership and visibility into its members gives its data and attribution capabilities that are likely unmatched by competitors. Amazon CTV ads loads lower and cheaper than its competition. We believe Amazon will generate just under $2 billion in revenue from Prime Video in 2024. Further, we believe Amazon will eventually point its ad tech stack and industry-leading data and attribution towards the open web, more meaningfully providing incremental revenue opportunities within its advertising services business. The market tanked Amazon last time on their earnings because Amazon missed by advertising projections by 200 million, and the street got upset. They wanted 13 billion. Amazon put up 12.8 billion. Pounds right here with two green candles here at 31.38. But the advertising capabilities on Prime and the digital ad ecosystem that Amazon's building, almost doing about $44 billion on a TTM basis, is exceptional. And what we don't talk about is Twitch, that they bought for $1 billion in 2014. Twitch is only gaining more and more and more popularity. And Twitch streamers are becoming like legitimate content creators. I mean, there are Twitch streamers that are bringing hundreds of thousands of people live at one time. I mean, those are numbers you can't even get on TV. So I think from that perspective, the more they refine the advertising capabilities there, Twitch becomes a underlooked gem that Amazon has and should help their numbers. So that's what you got on the Amazon upgrades today. Amazon right here at 177.83. It looks like a decent amount of you have Amazon in the portfolio as I'm looking at the comments. On the upgrade cycle for AI, out of 679 votes, 51% of you said no, there's not going to be an upgrade cycle for Apple AI. So we have a decent amount of skepticism in regards to Apple being able to pull off this AI super cycle. I kind of think they're going to pull it off. I don't think it's going to happen all at once, but I think eventually it will happen. I do think the more I use ChatGPT, the benefits for using ChatGPT is so monumental that if that was integrated into Siri, I would be using it every day because I'm using the ChatGPT app every day. And so from that perspective, I do think when people get a hold of it, if it's really as good as Apple says it's going to be, then it's going to be something you can't live without, which means more people are going to be introduced to LLMs. More people are going to be using AI. Apple is investing in OpenAI probably because they want GPT to be the core foundation model that powers Siri and the new ability to talk to Siri in an effective way to get things done. And so I'm bullish on it. I don't know if the upgrade cycle is going to be 100 million devices as Apple thinks it's going to be, but if it is, then like, I don't know, dude. It doesn't seem like we can deny Apple's momentum as one of those broader AI plays that is probably going to continue to gain consumer adoption. William says Amazon is a core holding, would love 150 that. Here's a question I haven't asked you guys before. What is your number one position? What is your number one position by share count, by overall weighting, whatever? For me, I'll go first. Obviously, it's Palantir. But what is your number one position that you have in your portfolio when it comes to, I guess, like just like how you, the overall weighting in your portfolio? What is the number one position? You could do it by number of shares, whatever you want to do it. But like, what is the number one position that is in your portfolio right now in terms of the actual shares that you have? Tesla, we got a lot of Teslas. We got a decent amount of Palantirs. PayPal. All right. We got PayPal there. We got Robinhoods. For me, it's obviously Palantir and Robinhood. We got CleanSpark. Interesting. So you got CleanSpark there. Palantir. 1.5x short Nvidia daily ETF. Oh boy. Well, if Nvidia keeps tanking, that's going to be a really heavy position. We got Kris, of course, BPYPM. Shout out to Kris Patel in the chat. I can't do a poll because it only allows me a couple of choice. Oh, I can do a Q&A in the poll. Oh, okay. So let's see. Number. Well, no, it's not. That's not going to give the numbers though. Yeah, we're gonna have to do it qualitatively. GameStop. I hope you're joking there, but you got GameStop. Grinder. You're definitely joking there. Interesting. So most people, I see Palantir, Nvidia, Tesla, SoFi, and Amazon as kind of the main choices from a number one position standpoint. We got a bunch of Robinhoods in there. I'm trying to see one that's a little bit different. Intel, okay, some people like Costco. There you go. We got Costco, QuantumScape. I've been seeing this name a lot more. Berkshire. You know what I've been thinking, dude? I'm happy you said Berkshire, Lewis. I've been thinking I want to do a monthly DCA into 3 ETFs because as I'm getting older, I'm like, you know what? I should start getting a little bit safer with some part of the portfolio. I want to do a monthly DCA about $100. And then hopefully starting next year, it's closer to $500 a month into 3 ETFs. And that is S&P, the Dow Jones, and Berkshire Hathaway. And although those 3 might not be the most exciting ETFs, I think they are relatively safe compared to like the NASDAQ, which is tech heavy, and SMH, which is semiconductor heavy. But I'm thinking of starting a simple $100 a month DCA into Berkshire, S&P, and the Dow Jones. This is money that I literally don't look at. Those $300 could have gone to Palantir, yes. Could have gone to Wheeling Options, yes. But this is kind of really safe money that over the next 50 years, I am hoping the broader markets in terms of blue chip stocks like the Dow Jones, S&P 500 for the broader equity markets, and then Berkshire Hathaway ends up doing okay. So I really do want to start DCAing into those 3 ETFs over time. Berkshire is not an ETF, but you guys know what I mean. I mean, like it basically functions as an ETF. But yes, Berkshire is a holding company. It's not an ETF. But that's one that I would want to include. Nvidia, Tesla, TMDX, that makes sense. SMH, that also makes sense. 3M, Palantir's almost 40%. SoFi. Okay, so here's the next question. Palantir just went green. Wow, hold on. If Palantir just went green, Nvidia is not green. Nvidia's still down 5%, but Nvidia, at least it's not at 112. Here's the next question. How many stocks do you have in your portfolio? Like real stocks. So like if you have 5 shares of CrowdStrike like me, don't count that. So I would say I have really 2 positions, Palantir and Robinhood. I've got a little bit of Tesla, a little bit of CrowdStrike, right? But Rocket Lab, but that doesn't matter. I'm talking about real positions. How many real positions do you have in your portfolio? Let's see that question. If this was Steve, he would say he has 500. So I hope no one is like Steve, but I'm curious what numbers people have. Let's see what we got in terms of those of those numbers. Okay, so I have 1 position, a bear Nvidia ETF. Dude, I hope Nvidia keeps tanking for you because if that's the only position, you're going to make a lot of money if Nvidia just keeps going down. Sam has 27. Okay, I like that number, but that's very specific. 3. Wow, most of you have 1 to 5. Most of you are pretty concentrated. I actually don't think that's a horrible thing, dude. Most of you are pretty damn concentrated. Kris has 10. Even 10, I think 10 is like a concentrated portfolio. Under 10 is very concentrated. I'm like obviously very concentrated with 2 positions, but above 10, you start to get into the like a more diversified investor, which is fair, especially if you're working with a lot more money. Probably want to protect that money, put it in a lot of different places. Yeah, pretty much most. I mean, we got some people with 14, 15, some people with 10. Most people here 1 to 5 positions. I think that's fair, dude. June has 50. Okay, makes sense. I think in general, yeah, if you have a lot more money you're working with, like someone like me who's trying to get wealth, I'm just not going to make strides in that if I diversify massively, right? You kind of have to concentrate to get to the point where you can diversify. I mean, this is what all the big investors say. Like you have to make a couple of big bets in order to take the portfolio to another level to then diversify and protect the money. But if you have, $500,000 to a couple $1 million that you're working with, I mean, if I had a couple $1 million, I would be pretty diversified. It would not be in just a couple stocks. But if you're trying to get there, then I understand the solidification of the portfolio. I mean, how much does Steve have, dude? I think Steve owns 1 stock of every company that's public. Steve's new company, I need people to crowdsource some DD on this. We talked about this yesterday, but DocuSign. He's coming out with an article on this. He called me on Sunday morning, right before I got my pedicure. And then he made fun of me for telling him that I was about to go get a pedicure after our phone call. By the way, the pedicure nail salon was booked, okay? The consumer in New Jersey is pretty damn resilient because I had to wait 20 minutes just to get a pedicure. But he was like, yo, we got to look at DocuSign. And I'm like, dude, I haven't used DocuSign in like years. He's like, we got to look at DocuSign. So if anyone finds any DD on this, please message me on Twitter. I'm sure Steve will be very excited to see your DD. He thinks the balance sheet is exciting. I don't know if there's that big of a moat for this company, but DocuSign is one of those ideas that if you want to look at, that's one that Steve's getting excited about. GameStop right here up 1.4%. Robin in 1978. Unity at 750. Visa 279. S&P 500 now down an official 1% on the day. Bitcoin continuing to fall. Oof. Nasty red candle on Bitcoin. Disgusting, bro. 58,305 on Bitcoin. CrowdStrike down about 1%. QQQ. Wow. NASDAQ down 1.3. There you go. Starting off September with a little bit of blood here. S&P down 1%, NASDAQ down 1.3. Where's IWM? IWM should be up if NVIDIA's down. Wow, dude. See, this is weird. NVIDIA's down 5%. You would think some of that money broadens out to the small caps, but IWM down 1%. Doesn't get any of that momentum. DocuSign is good as an acquisition target, in my opinion. I've been following them for a while. Probably one of the best alternatives for contract management. Let me say it is like Zoom in that it is better than Google Meets for like video conferencing, right? It's an independent a company that is seen as a feature, but I do think it stands alone as a company. The problem is it probably is more of an acquisition target than anything else. Now, the question is who's willing to pay $13 billion or $15 billion, which would only be a 10% premium of where it's trading right now to acquire the company. You would imagine they want to get closer to like a $30 billion or $25 billion buyout. If you look at the max chart, it was at $314 in 2021. This is why when people say, oh, 2024 is a bubble, I'm like, do you remember 2021? DocuSign was worth $75 billion at $314 a share. Now it's worth $12 billion at 58, which you could still say is a little overvalued, but it's way more reasonable than being at 314. So I do think valuations, people say they're stretched. I'm like, yeah, some of them are stretched, but the far majority of them are not insane territory like they were back in 2021. But if you guys find any DD on this, then definitely message me on Twitter and I'll hand it over to Steve. Adobe, where's Adobe right now? ADBE. Adobe does allow you to sign documents, but not a lot of people use it from my understanding. For some reason, it's weird, dude. When something becomes a feature inside of a big product, people don't use it. But if it becomes an independent company, which should be just a feature, it ends up being like a widely adopted thing. It's a unique phenomenon in terms of like the branding of like using DocuSign just for signing documents versus Adobe or Google to do that, because Adobe and Google and Microsoft let you sign documents internally as well. But Adobe right here up 1.4% on the day. Let's go to the semis. How are the semis doing? Wow. Look at the left-hand side of my screen. Bloody red. Micron down 5%. ARM down 4%. TSM down 4%. Intel down 4%. Looks like the restructuring news is not that bullish. Broadcom down 3%. Nvidia obviously down 5%. AMD down 4%. SMCI is the only one that's green, and that's because that one was down 20% last week. Otherwise, all of these are down. Qualcomm down 3.5. And then if we go to the SaaS names, where's the SaaS names? SaaS names are a little bit more mixed. Datadog, Snowflake, Confluent, Salesforce, Atlassian are down. Oracle's up a little bit. Adobe's up a little bit. Palantir is flat. CrowdStrike's down a little bit. ServiceNow is up. Where's MongoDB? Mongo's up 1 point. Yeah, they had a great earnings, so they're up about 20% for the week. But outside of that, most of these companies have taken a little bit of a hit. Chris says great rotation is real. Smart money is probably dropping Nvidia. You know, it's going to be really interesting. And if it is smart money dropping Nvidia, it would be a classic case of the street pumping something that they don't really own, because every price target besides D.A. Davidson after earnings said Nvidia's a buy, and they have a price target of about 160 to 150. So if you believe in that, then you obviously believe, you know, Nvidia is worth buying. If you don't believe in that, then you're probably having some sell side pressure. I kind of don't think this is the street dumping it. I think this is more algos, and just in general, we're getting into the beginning of September. There's a little bit of volatility across the entire market. I think you would need to see Nvidia go down to 90 to say that smart money is officially getting out of it and starting to rotate. I kind of don't think that's the case. I think the growth story is very intact for Nvidia. I don't think it's slowing down anytime soon. I think the beginning of AI is really just starting. The hyperscalers are continuing to spend more money. So I think all those bullish narratives are in place. But you might have some people just saying, hey, we don't like the valuation here. We'd like it back at 90 or 80 bucks. And we'll see where it goes from there. But again, to get Nvidia back to 90, dude, I think you would need a real macro. I don't think Nvidia alone gets to 90 and the rest of the market stays safe, given Nvidia controls 6% of the S&P 500. So I think you need a real correction to see Nvidia get to those levels. And we'll see throughout the month of September if that ends up happening. If you watch the Dan Ives podcast on the Compound, I mean, it was a pretty good podcast. I know, everyone has their different opinions of Dan Ives, but he made some really compelling arguments or how you should conceptualize the earnings growth for Nvidia. And, I tend to agree with him at the end of the day. Like, it does seem like you're going to have Nvidia having a little bit more momentum in the context of earnings per share. And that earnings per share growth is likely going to get you a 25 to 30 forward PE, which then gets the stock closer to $200. But it's a question of if you believe in that or not. It might be big money using Nvidia as their bank to sell and rotate into small caps. Yeah, that might also be the case as well. The thing about Nvidia is, like, at the end of the day, people are probably taking profits, and it's not, you can't blame them for taking profits, but I would imagine some people are taking profits on Nvidia. And if they are taking profits, some of that money might be rotating. Here's a quick 2-minute clip of Dan Ives. We heard this yesterday on the Future Show, but again, this is his logic for the valuation argument on why Nvidia is still cheap. And here's why he thinks Nvidia can grow into that $200 range.
Following quarter. Are you above this? Are you below this? Where are you versus consensus?
I mean, look, we ultimately believe above where $1.25 is really going to be the run rate per quarter. So in other words, like, you're going to now start to look at out year when you look at 25 and 26, $5.50 per share. In other words, like, that's real. Like, if you're buying this stock, you're basically, the number that you're focused on is $5 of earnings power. Like, that's how I think that. And if you look
like
historically
on an annual run rate,
on an annual basis,
yeah,
because also you're looking, most investors that are in this name and broader, you're looking at, like, okay, when does Blackwell ramp? What does true numbers look like when this is actually at scale? And $5 is really the number, the out year that I think from a buy side or whisper. So that's why.
So that $5, again, you put 25, 30 multiple on it. That's how you get to that $125 to $150 price range. All right, we got some new macro data, folks. We just had ISM data come out at 10 a.m., which was 3 minutes ago. So US ISM manufacturing is 47.2 versus expectations of 46.8. That's good. That means we beat expectations. Previous was 47.5, a little bit lower than the previous number. We are still contracting below 50, but we're above expectations. US ISM manufacturing prices, 54 versus 52.9. Previous estimated at 52. That's good. Good news is good. Means more growth. USM ICE manufacturing new orders index, 44.6 versus 47.4 previous. So that's a little bit down. US ISM manufacturing employment, 46 versus 43.4. That's actually really good. Maybe it shows us that the jobs data on this Friday, which if you're just joining, September 6th, I'll be live at 8:20 a.m. I'll be live 25 minutes earlier because at 8:30, we're going to get one of the most important and consequential job reports that we've gotten all this year. That ISM manufacturing employment data looks like hopefully jobs will be a little bit better than expected from the street. So there you go. ISM manufacturing, not too bad. Unfortunately, the market does not care at all. The market does not give a shit about this. September blues are getting the market wrapped up. Wow, S&P down 1.15. All right, so S&P is actually taking a little bit of a crap. S&P is going down. The NASDAQ, I would imagine, is down even more. Yep, NASDAQ down 1.32. September's here. The red is here. It's time to engage with September and deal with the volatility. Again, if you're just joining, we looked at a couple charts. September 17th to September 30th tends to be the worst for September. But in an election year, September actually tends to be up 0.5% every single election year since 1950, or on average. So we might see that volatile downturn, but we also might see the election year kind of save the S&P from really taking a big hit. I think a lot of it is going to be based on rate cuts, the jobs data, and then obviously how the Fed decides to pivot or continues to further engage in rate cutting going into that FOMC meeting on September 18th. So we're going to see what happens. How did you manage to get the Robinhood Gold card? They said it's not available in New Jersey. I do not have the Robinhood Gold card. So I don't know where you heard that, but I don't have that card. Yeah, it's not available in New Jersey. I got an email from them a while ago saying that they're doing it based on geographic location. So that might be the reason for people that are worried that they don't have their card. One of the reasons might be that it's just not available in your state yet. So yeah, I don't have it yet, but I do know a lot more people around Texas and California that have started to get it. And hopefully it begins to roll out a little bit more towards the end of the year. Okay, Kris, I'm going to give you a call. I'm going to get your thoughts on the markets. Let's see if Kris picks up. I think we should be able to get him for about 5 minutes. So, Kris, I'm going to give you a call. Let's get your thoughts on the beginning of September. Let's see if we can get Kris on. Do we have Kris? Let's see. He might be busy right now. Who's buying today, folks? Yeah, I'm not really. I think we're going to have to wait to see.
What's up, guys? How's it going?
Kris, what's up? How are you?
Good, man. I was just about to go use the bathroom, but I can spare a minute.
Dude, I swear I was about to say, if you didn't pick up, I was like, Kris is definitely taking a shit right now. Like, Kris is definitely. Yeah. Okay, so I don't want to keep it too long, just about 5-6 minutes. September blues, what are your thoughts going into a seasonally weak time for the market?
I mean, there's not really much to say. Just we had a good V-shaped, quote unquote, a V-shaped recovery in August. I'm not even honestly thinking about September. My whole thing is how do we position ourselves to capture the upside for the rest of the year? Because I think we're going to have a pretty decent rally going into the end of the year. I do think that the rotation is real. Everyone better be rotating right now. Realize that there are themes that are kind of played out already, and now you're going to see money moving from one part of the market to the other. And so it's a smart idea to kind of look for opportunities in the other parts of the market because the rally is broadening out. So I think 2025 is going to be a pretty flat year, but you're also going to see a lot of money moving out of like the mega caps, which are from a multiple standpoint, like a little bit over. And you might see some of that money trickle into like smaller cap names, especially those that are, those that are pretty like recession resistant, and multiples in those segments should expand. And then on top of it, if the Federal Reserve like signals that we're going to get multiple rate cuts, not only this year, but the next year, then you're going to see multiple expansion happening as well. And, if you look outside the Mag 7, Mag 8, whatever you want to call it, they're actually not that bad. There's a ton of opportunity out there with great companies, with great businesses that are growing, at a healthy clip, and they're all trading at, pretty almost some of them are trading at single-digit PEs. So I think the rally just needs to broaden out.
So you're not afraid at all for September weakness?
No, I mean, I have some cash on the side, so I'm pretty much just going to be adding to certain positions that I have, mostly fixed income, because I told you I'm going to be a lot more risk off for 2025 than I've been this year. This year I've been able to capture a lot of upside because coming into the year we had, well, not coming into the year, but October was really, really bearish for the market, and so there were a lot of opportunities at the time, and there's just not a lot of great opportunities in regular equities right now.
Why? And what do you say that because of valuation? Like, what's kind of the reason that the Mag 7, for example, don't look that exciting anymore?
It's not that they're not exciting. It's just that, their valuations are kind of up there. And on top of it, if we do get any slowdown in AI, a lot of them are getting an AI premium because, of course, they're all involved in it. So if they get hit by that, then that means that they're going to come down a little bit. Very similar to 2021, where they kind of overhired. I think right now they're all overspending on this AI infrastructure, and eventually shareholders are going to say, what the hell is going on? Like, we're not going to tolerate this unlimited CapEx with very little ROI to show for it. Now, a lot of these companies believe in this wholeheartly, like, hey, this is going to revolutionize everything. But, eventually you're going to have to show that you're generating some tangible returns. So, like, I think that's going to be one of those things that plays out over the next couple of years. And who knows, maybe a killer AI app will come out, in which case the AI rally will continue. But as far as I can tell, the AI rally is probably going to be pausing a little bit. And you're going to see the hyperscalers maybe next year take a little bit of a break when it comes to their CapEx growth numbers for AI. So you might not see as much build out in the infrastructure and just let the market. You heard did you hear the interview with Dan Niles?
Yeah. Yep.
That's exactly what's likely to happen. You're going to have a period of digestion where all this demand for AI chips was brought forward because each one of them was trying to, out compete the other one. So that same thing happened with employees in 2020 and 2021. You remember where people were getting hired because they were like, oh, if I don't hire them, then Google will take them. And so then Google ups the ante and says, I'm going to hire. And so all these people were just hiring top talent. And basically, it was just not really providing them with real value. So kind of a similar thing is happening, in my opinion, where a lot of these guys like Microsoft, Google, Meta, Amazon, they're at a point right now where they're, it's an arms race. And I think eventually all of them are going to realize that, wait a second, maybe like spending all this money and not getting the ROI that we need is not a good thing. And the shareholders, like I said, will eventually turn on them. And in which case 2025 could be not the greatest year for tech. But that doesn't mean that tech will go down and we'll see like a correction like we saw in 2021. It's just we might not see we might not see
super multiple expansion given that they're already. I think that's fair. Okay, couple rapid fire questions for you. Apple AI upgrade phenomena. Do you believe that there will be a massive upgrade cycle?
Like I said, I don't see any killer apps that would make me want to like, oh my God, I need to get this new iPhone. I mean, I'm likely to get the new iPhone because I'm still using an iPhone 10 or an iPhone X. And it's kind of, showing its age. So I'm at the point where I'm kind of caught in the upgrade cycle. But I'm not so sure that there's a lot of people that are going to be in that same boat. I mean, then again, maybe the phone, when it gets released, it has crazy AI features that, because remember, we don't know what the features are.
Yeah.
So right now, we all we're assuming is, it's a phone with AI in it. But no, I want to see like, okay, what features in it that make me like, oh my God, I need to get this. Like, can you think of anything that right now that they've shown that makes you want to switch out of your current phone and get the new one?
No, not really. I mean, like, again, Siri with LLMs would be exciting, but besides that,
it's just, like I said, you need to have like applications that work to make this thing better. And like I said, I don't see the AI the AI application system that's like returning a ton of tangible value to the consumer. Maybe it's doing it at the small business, not small business, at the enterprise level to some degree. But remember, Apple is a mass market consumer product company when it comes to the Apple iPhone. So you really need to like I said, we'll know more in September when they finally like come out with some of the products, and we'll see what happens.
Last question for you, SMCI. This stock's down about 70%. I mean, a stock that's down 70%, that's as important as SMCI in the S&P 500, Nvda correlation. Most people would think, hey, that's an exciting opportunity. Would you be buying SMCI right now?
No, man, it's a low margin business. It's a very, very low margin business. It's not, they've got competitors from, Dell and HPE, and like the secular growth trend that they had in the past, when I was first talking about it when it was $90 was different because there was an AI arms race. All these people had to not only buy NVIDIA GPUs, but they also had to buy the hardware that went along with it. So if my thesis right now is, hey, I think AI spend is going to slow down, yeah, it's going to impact NVIDIA to some degree, but at least NVIDIA has some unique moat around it that's not going to let, the spend completely die.
Yeah.
Whereas SMCI has no moat, other than maybe like some cooling stuff that they seem to have a little bit of an edge versus some of the competitors, but they don't have a moat, man. They're just a hardware, like a server hardware provider. So it's nothing that I would, and it's very low margin. So, and right now, if you look at the valuation is kind of crazy. So it's not, I wouldn't touch it.
All right. Thank you, Kris. We appreciate it. Chris's Twitter in the chat. Kris, have fun in the bathroom, and we'll see you next time.
Later.
Later. Thank you, Kris. All right, so Nvidia, folks, we just saw a run or a dip to 111, and now we're back at 112.30. Yeah, today is a dippy day, dude. Today is a dippy day, down 6%. 6% is, wow, it's under 3 trillion. 6% is basically 120 billion, something like that. I think that ends up being the number for the market cap. And here's the thing. The more Nvidia falls or stays flat and they continue to grow, like if Nvidia ends the year at 115 after another cycle of growth, another quarter of growth, their PE would be very attractive, especially their forward PE. And so same thing with CrowdStrike, that is, right? If CrowdStrike stays flat over the next 3 quarters, that's not the worst thing in the world because then it actually becomes attractive. It doesn't become necessarily overvalued right now. You could still make a case for why CrowdStrike is overvalued, just given the valuation metrics. Nvidia, if it somehow stays flat over the next couple of quarters, from flat, I mean 100 to 120, that PE starts to collapse and it starts to really look attractive, which usually tends to be the reason why it doesn't stay flat, right? People end up buying it before it continues to be at those attractive levels. But that's not the worst thing in the world, I think, for long-term shareholders that want to establish a real position. Like if you're just getting into Nvidia and your average is 115, 100, 120, you kind of want it to be flat, right? You don't want it to go to 150 tomorrow or 200. Again, 200 would be a $6 trillion company. I don't think that's happening anytime soon. 150 is closer to 4 trillion. I think that takes some time. And maybe we're seeing the market kind of just give it some time as it continues to play out. Joe says this is very bullish for Palantir, given how much the market in Nvidia dropped. Palantir has not gotten down that much today. Yeah, and we talked about this last week on the Palantir daily episode where we were recapping Nvidia earnings. One fun part about being a Palantir investor is that they're a software play, not a hardware play. The software build out has not happened for AI. I mean, barely 5% of companies have gone down the route of figuring out how to implement AI into their businesses. And although, there's still a decent amount of hardware infrastructure to build out, in the words of Jensen, it's about $1 trillion of CapEx. The software build out, I think, is going to be even more lucrative over the long term. And it's not happened yet. And you don't need the hyperscalers to invest in software applications. You can get every single company and government on the planet implementing AI into their operational workflows. So the market opportunity is gigantic. And if the hardware build out starts to decline, I think the software build out begins. However, we are so early that I don't want to see Nvidia start declining and Palantir start going up, because that means demand for GPUs is starting to fade away. And that means demand for software applications based on those GPUs, which is the only reason the software applications make any sense, is not as strong, because we're in the early innings of the story. If this is 4 years from now and GPUs fall off and software goes up, then I understand, or even 2 years from now. But in the first couple 18 months, I kind of want to see both of them continue to gain momentum, because because then you ask yourself the question, okay, are people not buying GPUs because they don't think there's any value in LLMs? Because if that's the case, then Palantir's whole AIP go-to-market kind of falls apart, because then companies really don't care that much about integrating LLMs into their infrastructure. And that's not a good thing. You want to see them care about that, because that's how Palantir gets to sell you Apollo and Foundry and all these other products. So I still think NVIDIA has a pretty deep impact on software names like Palantir. Cool. So that's what we got in the context of NVIDIA and Palantir. Bitcoin's under 58,000. Of course it is. Bitcoin taking a little bit of a hit right now. Bitcoin also, I think, is going to be tough in September. I mean, if crypto falls off a cliff, or if the market falls off a cliff, Bitcoin is going to correlate with the market. So I think it's going to be tough for Bitcoin to gain momentum. But I do think under 50 gets at least a little bit more exciting for Bitcoin. But we'll see if it actually gives us those prices and it gets that bad. What do you expect for Path earnings? I have zero expectations for Path earnings. I have no idea what to expect for Path. I think the stock was up last week. Remember, it fell like 50% last time. 1284. Yeah, I have no idea, dude. Robotic processing automation to me is not the most exciting thing in the world. They're not profitable. You could still argue they're overvalued with a 34 PE, 5 price to sales. Like, I don't know. I would expect Path to, if they show anything positive, to go up, because they're down so much year to date. But in terms of a moat as a software play, I just don't know if there's anything that exciting for Path. But they're down 50, 60%. You would imagine they show some positive news in the market, at least gives them a little bit of momentum. IWM is now down 1.59%. This is just annoying. And I know people who are in small caps right now have to be annoyed. Nvidia being down 7% should not have IWM also go down 2%. Like, this is contrary to the IWM thesis. The thesis is large caps fall, money rotates. Money's not rotating into IWM today. Maybe that happens after the rate cuts, but that rotation theory has happened in individual equities, not into the broader indice or index that is IWM. S&P down about 1.2. The NASDAQ should be down a little bit more. NASDAQ right here, yeah, down about 1.52 on the day. Is the 10-year up? Kris said to look at the 10-year. Is the 10-year up? Huh. The 10-year's down at 3.84. Interesting. So the 10-year is down while the market is down as well. Why would small caps rally if large caps fall? Well, you know, there's a way you can say that thesis is stupid. One way you can say that thesis is not that stupid is that the earnings growth of small caps is 14% higher and the PE is 50% lower. So they have a 50% less PE, which means they're trading at more attractive valuations and they're growing faster than large caps. So historically, you can argue that, all right, so market's going to go where there's relative undervaluation. The problem is, why would you sell Google for some random no-name company in the IWM index? That's always been the bear case for buying small caps over large caps, which is fair. But in general, kind of that Tom Lee sector rotation has been that large caps will stall, money will go to undervaluation. Undervaluation is small caps, and that's where you'll get more momentum. Yeah, so the 10-year is going down, obviously, because people are starting to buy the 10-year. So when people sell the 10-year, it goes up. When people buy the 10-year, it goes down. So you are seeing, as Kris says right here, rotation into treasuries instead of small caps. So we're getting some money potentially going into bonds over other asset classes. It's definitely not going to crypto. If it's definitely not going to small caps, maybe it's going into treasuries. And as Kris says right here, people are chasing safe yield. That's why Verizon is up today. That makes sense. You would imagine some of the safer dividend plays are up. Verizon right here. Yeah, there you go. Look at that. Verizon up 2%. Is T-Mobile up as well? T-Mobile is up 0.54%. Let me see stocks that are moving today. Let me see if I can get a list of those. So stocks that are up right now. So I'm looking at a bunch of different names right here. Some of these names, Redfin is up a little bit right now. Polestar is up a little bit. Some of the value plays are up. Berkshire is up a little bit. Is Coca-Cola up? Let's see if Coca-Cola is up. Coca-Cola is up. Yeah, so yeah, you're getting a rotation right now into value and treasuries. At least that's what it seems like. It's not into small caps. It's not into tech. It's not into crypto. And it's definitely not into some of the more speculative names. But then again, GameStop is up 1%. So maybe some of the rotation is happening to GameStop. Nvidia is still struggling. Nvidia really not catching a bid. Bottomed at 111.78. Now it's at 112, but not catching a bid. Palantir holding up nicely at 31. So some of that rotation that's happening, it's not coming out of Palantir. It's coming out of some of the other large cap tech names that are going on. Healthcare as well. Yeah, United Healthcare is probably up right now. UNH. Some of the more defensive names are catching a bid. Yeah, there you go. United's up at 1.2. Okay, let's get an update from CNBC, and then we'll keep going from there. But we are seeing a bit of a rotation this morning as we enter the first trading day of September and start to see that the market's a little afraid of what they're going to expect going into this month.
Priced in.
Speaking of which, you can see 1% declines here at the open, under pressure a bit as we do kick off a new trading month. September, as Sarah said, historically the worst month of the year for the major averages. S&P's down of the past 4 Septembers. Oppenheimer Asset Management Chief Investment Strategist John Stolfus is with us. His firm has an S&P target of 5,900. That I think remains, John, the second highest on the street.
Yep.
Any misgivings at this point?
None whatsoever at this point. I mean, we're watchful, most certainly, but I think it was just as Sarah was saying, you know, things are, when you look at it, while there are concerns, like today, the declines that we're seeing are reflective of, well, what happens with these numbers? But most of them are short-term trading oriented and natural before a number is released because of the vulnerability for short-term traders with options positions. But for intermediate to longer-term investors, this looks like, if anything, if we get any kind of a pullback this month, if that softness comes through, there will be opportunity to catch some babies that get thrown out with the bathwater.
You think 5 to 10 down in the next couple of months, you'd be ready for it?
Oh, I think you always have to be prepared for that, Carl. There's never an all-clear signal. There's always, what in the old days, Barton Biggs used to call it the bolt from the blue or a sock to the jaw. But we're not seeing that. And it looks to us, when we look at it, the economy is showing resilience across the consumer, across business. across job postings on a healthier basis rather than expecting numbers that are too large.
But again, how much of that is already factored into this market, which is up 17% year to date, NASDAQ up more than 16% year to date? Does that make us more vulnerable to some of these other risks out there?
I think not quite as much as so vulnerable, but most certainly likable to get a haircut, a trim or a haircut.
Tesla's up 2%. So Tesla going in against the tech sell-off right now, but everything else continues to fall.
Cut is always possible, but from these levels, we'd have to say it still looks to us very similar to what we've seen this year when we get these periods of pullbacks. It's a relative taking the market down for maybe perhaps a little bit of froth in certain areas, or just diversifying now across the sectors. The rally from the October lows of last year has been very broad. The rally from the start of this year was narrow, but now has broadened of late. And so what we're seeing now on a day-to-day basis, you get the traders are moving in and out of positions, but so are intermediate to longer term investors moving towards greater diversification. So we look at it, we think the economy is in relatively good stead. And the earnings season with 11.5% earnings growth, much better than expected.
What's happening in expectations from here on earnings?
Yep. And I would expect that we'll likely see similar to first quarter and second quarter positive surprises. I don't think we're going to, just what you were mentioning in terms of the comments from different companies, all of a sudden consumer discretionary, it's been realized, and we've said that all along, don't bet against the American consumer.
I'm telling you, he's right about that. When I went to get my pedicure on Sunday, the American consumer was strong. Now, maybe you want to say it's a New Jersey thing. Maybe you want to say I live near the city. So that, but I dude, like people, there was like a line to get a pedicure, $30 to clean your toenails. I mean, if Americans are willing to spend that much money on a pedicure, $30 is a lot of money, don't you think? I mean, that's a decent amount of money for a fucking pedicure. I think the consumer's still resilient. If you just hashtag Target or like Target Haul on TikTok or Instagram, the amount of people that go to Target, like American individuals, and they spend $300, $400 at Target. I mean, it's just astonishing. Like, like people spend a lot of money in America, bro. Like maybe this is why our credit card debt is so high, but the American consumer has not collapsed yet, dude. We are ready to keep spending. And so I think to his broader point, in all seriousness, the American consumer spending, jobs data we'll get on September 6th, I don't think is going to be as that bad as some may project in terms of pricing in a recession. You've got rate cuts coming up, and then you've got earnings growth that is still good. So even if you see a bit of a rotation in the broader equity markets from growth to value or from growth to treasury bonds, I don't think that necessarily means that a bull run in the end of 2024 is over. And that's pretty much what Kris was saying. I largely agree with Chris's thesis on the Mag 7. Like at the end of the day, do I think Meta could be $600 by the end of the year? Yes. But I also think it's up 50% year to date. And that's like a lot, like any stock going up 50% year. That's why whenever Palantir has a down 3% day, I have to remember that, dude, it's up 90% or 85%. Like I cannot be that upset about a down 3 or down 5% day. So do I see Meta going to 600 by the end of the year? Maybe there's some catalyst to get there, bull run, rate cuts, election advertising, sure. But in general, you can't ask for that much more multiple expansion. Same thing with Google. Google's still up a lot year to date, even though it's fallen. Google's now one of the cheapest Mag 7s. Same thing with Amazon. But they're still up a decent amount year to date. Now, Microsoft is underperformed. It's only up about 9% year to date. But then again, Microsoft has slowed down a little bit on their Azure cloud, and that's what the street is upset about. But Microsoft also trades at a 35 PE. So I say all of this to say there's a lot of tailwinds going into the end of the year, macro and earnings-wise, but it doesn't mean the Mag 7 have to be the beneficiaries of all that earnings growth. If there was any company that I think would actually explode towards the end of the year in the Mag 7, it would be this guy. That's up 2%, Tesla, because Tesla's had a really rough year, still down 13% year to date. And Tesla has the biggest catalyst out of all the Mag 7, which is 1010 and FSD. But besides that, I think valuations are relatively okay. Some of them could be a little stretched on the Mag 7, but I don't think they have to be getting a haircut of 30%. I also don't think they need to expand 30 to 50% because the earnings growth probably is going to justify it that much. Again, we got a lot of growth early. Like the S&P is up 18% year to date. I think we end the year closer to maybe 22, 24% up year to date. But a lot of this happened really quickly. It wasn't a slow, gradual grind. It was kind of all at once. Then we had this massive wick in April. Then we got back to it. Then we had this massive wick again in August with Japan. Then we got back to it. And so it wouldn't surprise me if we have another little drawdown, but the market ends up recovering. towards the end of the year. So we'll see how that plays out, but I don't think it's necessarily going to be the worst thing at all. Matthias says Meta is only 26 PE, 22.4 though. It's not that crazy. I agree. It's not that crazy. 100%. This is what I think Kris was saying, is that the valuations aren't crazy. The problem is the stocks are up so much. And it's kind of like buyer fatigue. Like at some level, you could argue, if you look at Nvidia's growth over the next 5 years, paying a 46 PE is actually not crazy. Or if it falls another 4%, you would pay a 35 PE. That's not crazy. But there's a lot of buyer fatigue. And with a stock like Meta that was below 350 in January and now is at 514, you just have to ask yourself, how much more momentum does it really have to continue going higher? But that's also why, see, this is the Goldilocks zone. Yeah, the buyers are fatigued on buying Meta, but then you said, well, it has a 22 forward PE. So if Meta were to drop aggressively 10%, that's why you buy. Because then Meta's PE would go from 22 down 10% to what, maybe 18, 17? Then it becomes really cheap. So it's like, this is why I think this is why I think it's actually a really nice zone that we're in. We're not in this world where Meta's trading at a 50 PE, and if it drops 50%, it would only be trading at a 25 PE, which wouldn't be that attractive. If Meta drops 10, 15%, it gets even more attractive. So you get the buyers to step in. Same thing with Nvidia. And the growth is so strong enough. Nvidia now down 6.5% at 111. Now it's really tanking. The growth is strong enough to justify forward multiple expansion, even if that forward multiple expansion doesn't happen over the next 5 months, because the stock is already up 50% for the year. So that's why I think the Max 7 are still going to be attractive, even if they take a little bit of a dip going into the back half of the year. Wow, Nvidia's really taken a little bit of a fall right here. So now there's the green candle at 111.44. So people jumped in at $111.44 to stop the bleeding, but it was on its way down below 111 if it had continued. So now Nvidia's lost a legitimate 185 billion in market cap roundabout today, which is tough. That's a tough decline, but we're going to see if that pain is able to stop or if that pain continues to go. I mean, getting a flush out on Nvidia as well, I don't think is the worst thing in the world. Like just getting it to 90 and like having it flushed out the way a lot of people thought it would be flushed out. I think you get dip buyers there. I don't think that's the worst thing in the world, but I think if it happens this time, it'll be a slow decline. I don't think it's going to be like an August 5th flush out, because you're just not going to see volatility increase that much in a day unless we have an external event. Now you're going red. There you go. So again, it went to 111.35. Then it got a green candle, but it does not look like an encouraging green candle. It looks like a green candle that is ready to flip red. This looks like some sympathy buying that's happening right now. Everyone's basically holding out and waiting for a dip probably below 100. I think that's where people are getting more excited about. Well, that means the semis should be getting hit badly. Yeah, look at this. Marvell's down 5%. They had a good earnings, but they're down. TSM's down 6%. Broadcom down 4%. Qualcomm down 4%. AMD down 5%. Intel down 5.8%. ASML down 3%. Micron down 5.6%. Dell down 4.3%. Dell holding up decently, even though it's down 4%. They had a decent earnings as well. ARM is down 5.8%. ARM, I think, always deserved to be down a lot more, but SoftBank's propping it up. TSM down 5.5%, and then ON Semiconductor down 4.7%. So the semis are taking a hit. What else do we have? Why is Unity up? Unity got upgraded today. Unity right here, 1782. They're up 8.83% on the day. Anyone selling puts on coin? I would be a little afraid of selling puts on Coinbase. Coinbase is not that interesting, to be honest, until Bitcoin gets momentum. Again, Coinbase is a proxy on Bitcoin. It's really sad to see Coinbase below 200, but there you go. You got Coinbase below 200, down about 3.69% of the day. Until Bitcoin gets momentum, Coinbase is going to be stuck. So the premiums are amazing on Coinbase, but you got to have a long-term mentality for coin. It should not be just a cash grab. Because if it's a cash grab, I think you're going to be disappointed in September if Bitcoin continues to be volatile, because Coinbase is probably, headed a lot lower. Also, the trading volumes, we talked about this last night. The trading volumes are horrible for Coinbase and Robinhood. Retail is not back. They're just not back into crypto yet. It's going to take some time before they get back. And so until they get back, I think we're going to see a little bit more pain for the crypto proxies. Let's get an update on semis. Let's see what is going on there, and then we'll keep going forward.
I say that in that I think that we're coming off reports that were relatively strong. You saw, of course, Marvell had a very good earnings number. At the same time, you had Nvidia give us what I thought were very good numbers, and the stock traded off. So I think it's been a decent earnings season, but expectations were high.
Are you getting clients asking whether or not some of the issues at, for example, an Intel are contagious?
No, I don't think so. I think with Intel, everyone views Intel's problems as very Intel specific. So it's not telling you much about the market. Rather, it's telling you about Intel's struggles with manufacturing, chip design, some of the execution issues that they've had. And part of the problem that Intel has is that a lot of these issues are expected to get resolved in the late 2025, 2026 timeframe as some of their new processes come out. So it's not even something that they can fix anytime in the near future.
So are you saying, Matt, nothing about the narrative, the very bullish narrative that's been driving these stocks all year long has really changed?
I don't think so. So I mean, I think there's been an AI trade that's been driving all of these stocks. We just had Nvda come off a quarter where they grew by $4 billion sequentially. They guided for another roughly $2.5 billion in growth, almost all tied to AI. Each quarter, it seems like they've left themselves some upside. They are pretty much the proxy for AI. And so, no, I mean, I think at this point, there's not a whole lot of evidence that we're not continuing to see investment in AI. And I think you head into next year, there is a real potential that we start seeing AI in devices, which for the semis, that drives content in PCs, content in handsets. It's good for almost everyone.
Yeah, that's going to be one of the stories we'll be on the lookout for certainly next week once we start getting a peek at some optionality of AI in consumer devices. Matt, I'm sure we'll talk by then, if not before. Thanks so much, Matt Bryson.
Thank you.
Yeah, so it seems like pretty much everyone agrees. A little bit of a rotation outside of the semi names into value. Carnival Cruise up right now about 1%. Tesla's up 1.3%. GameStop's up a little bit. United Health, Coca-Cola, T-Mobile, Verizon, some of those dividend-paying stocks are green. Apple down 2%. Wow, S&P down 1.3%. It's so crazy, right? Like the market is so predictable sometimes. Like September, we all knew it would suck. First day of September, it sucks. Like it legit sucks. And it's just kind of like it is what it is, right? The market kind of acts in a certain pattern, and we're seeing that pattern as we get into September. I do think the more times you do this, like the more years you're invested, you're more prepared for this situation. Like if this is your first year in the market, you might be thinking, oh my God, we're having such a good year. How is September starting off that bad? But like if you've been in it for a while, you might have raised cash in August to get ready to buy the dip in September, right? Because you knew that September would be a little tough just from a historical perspective. So that's what we got going on right now. Regionals are down 1.5. Bank of America's down 1.0. Snowflake at 113. Palantir's still holding pretty strong in this $31 range. I don't know if you guys saw the video I did over the weekend, but Palantir's Alex Karp did get sanctioned by Russia, which was pretty hilarious. So they said Karp is not allowed to come to Russia. I don't think Karp wants to go to Russia. I think obviously Palantir's technology is being used in Ukraine, is hurting Russia. So that's why they sanctioned him. But kind of funny that they sanctioned him. I think he's wearing it more as a badge of honor. But Palantir right here at 31.09, down about 1.29% of the day. Not too much pain. Even CrowdStrike down 1%, not too much pain. Really, the pain is in Nvda. The pain is really in Nvda. Everything. I mean, the Nasdaq's down, Apple's down a little bit, but other stocks are down about 1 to 2%. Nvda is getting hit, down 7% right now. Enovix getting hit again, a little bit more of a riskier play. So growth and risk on is definitely off the table to start off September. And then CleanSpark, I mean, again, dilution, Bitcoin mining, is a little bit more risk on. And so that's why that one is down at 10% as well. But everything else outside of the semis are not getting that big of a sell-off. But the semis and some of the more riskier companies like Salesforce, right? Salesforce is fine. Microsoft is fine. Upstart, interestingly enough, this one I would expect to be down. They're down 8%. This makes sense. It's weird because they were up 80% over the past month. That's not a joke. They're up 80%. you might see some weakness here as the market tends to sell off some of these more riskier names. Celsius as well, below 37. First time I'm seeing it below 37 in a while. Below 35, then you got to go look out below because then it's going to crash. Or technically, that's what the charts say, that it probably heads to the 30s if it goes below 35. But holding on at 36.80 right now, so we'll see what happens with Celsius, but that one is down 3% on the day. Is Enovix Steve's battery play? No, he's not talking about Enovix. He's looking at some other stock for battery. But Enovix has a really good retail investor base. Funnily enough, the CEO of Enovix, Raj Talluri, I think he's the CEO. He canceled his Twitter account last week. Like he turned it off. I don't know if that's bullish or bearish. You could say that he's going into zero dark 30 and just going to work. Or you could say that, well, the rumor I heard was that he sold some shares, and when the Form 4 dropped from the SEC, he got a lot of pushback on Twitter of people like asking why he was selling, and he like couldn't handle it. That's the rumor that's going on right now. Dutch Bros is green. Walmart is green. I don't know, dude. That's kind of bearish to me. If you're a CEO and you sell like 50,000 shares and you can't handle some mean comments about selling 50,000 shares, and that's why you have to quit your Twitter account, you're kind of thin-skinned, in my opinion. Like, if you're a CEO, first of all, why the fuck do you care about if people are getting mad at you for selling shares? Like, you're a CEO, you're going to sell shares. Like, it's what happens. B, if that's the reason you got to get off Twitter, I mean, like, that cannot be the fear of Twitter. I mean, people are going to say whatever the hell they want on Twitter. You got to be able to deal with that if you're a CEO, you know? So I hope it was more so because he just wanted to focus and not because he got scared that someone called him a loser for selling shares. Because if that's, you know, if that's what you're afraid about on Twitter, you're just not going to survive with the public image. It is weird for sure, right? I mean, look, dude, if Elon just got rid of his Twitter overnight, or if Bezos got rid of his Twitter, or Toby Luke from Shopify, or Daniel Ek from Spotify, these guys aren't as active as Elon on Twitter, but let's say they just got rid of their Twitter account. I'm sure a Shopify or Spotify shareholder will be like, what's going on? Why did they just get rid of, you know, like what's happening? Like, it's one of those things where you just want to make sure things are okay. Shopify down 2.74%. And then Spotify down about 2.4% as well. You know, you kind of want to make sure things aren't going that bad. Is Tesla still green? Tesla 215. Tesla slightly green. Nvda is, wow, 110. Holy crap, dude. Holy freaking crap. Nvda is taking a dump. I want to look at the cash secured put premiums right now on Nvda at 95. How much is the market willing to pay for a 1 month out $95 strike? Let's go to October 18th, $95. Wow, it's actually 220 divided by 9,500. Market's willing to pay 2.3%. Even if you go to 90, market's still willing to pay 142 divided by 9,000, 1.5%. If you just want to get 1%, you could go to 85. 91 divided by 8,500. Yeah. So you could sell an Nvidia put at $85 for October 18th and get 1% on your money. Now, again, you have to decide if 85 is a decent strike. Do you like that price? Do you not like that price? But that would be 85 from 110 would be about 22% down. So I don't know. Maybe we'll see that happen at the end of September. Maybe not. But at least today, we're getting some decent sell side pressure. I think the buyers get more excited under 100 on Nvidia because now people are like, all right, if you're going to dip, you're going to dip. This is the psychological thing we talked about before. Like at 110, it's not that exciting. If you think it's going to 100 and you're going to wait out, maybe that's a bad, maybe if you're really excited that you shouldn't be waiting out. But I think the far majority of people are not going to get trapped into buying in a seasonally weak time. They're going to wait for a real dip. And 7% down, it's a dip, but it's not a real, like people want to see Nvidia bleed badly. And we'll see if that ends up happening. At 130, people wish they bought at 110. Yeah, that's fair. Again, the thing about buying at 110 is that it happened pretty quick, right? So if we got 110 at the end of September, as we gradually fell 0.5% every other day, then I think 110 would be really exciting. But if you get 110 in one downward wick of 7.5%, I don't think the market gets that excited to buy that because the market now wants to see like, hey, especially if the broader market is not down, only Nvidia is down. That means it's an Nvidia issue, not an S&P 500 issue, which is what was happening on August 5th, right? The whole market collapsed. That's why people just put money into the market. But if it's only one individual name, then you're asking yourself, well, is this a problem with the individual name? Let me see if it can go down even further. And I think that's what people are going to be waiting to see if Nvidia continues to fall. I will sell all my Nvidia when Nancy Pelosi does. That's another thing. Nancy Pelosi bought 20,000 shares at the $120 level in July and June. So, if Pelosi is bullish, I guess it's going to be a question of seeing if that thesis for Nvidia ends up playing out. She also bought Broadcom. She has CrowdStrike, Palo Alto. She has a decent amount of these tech names. Okay, let's get another update on what some traders are doing as they handle September, and then we'll keep going from there.
NBC contributor. School is back in session, and so are the markets. Stephanie, what are you doing?
Good morning. I'm buying. I was adding last week to a few names in Broadcom, in CrowdStrike, in Chipotle, and I think you want to be adding to stocks on weakness if we get it. And today we're getting it a little bit. September should be likely a little bit volatile, and I think you want to use that weakness to be adding. I mean, we got through two big hurdles over the last couple of weeks, Andrew. We got through Jackson Hole. We had a very dovish Fed Chair Powell, and then we got through Nvidia, which was actually quite good. I know it sold off on the news, but the numbers were really good. The AI boom continues. And so in the meantime, you have the economy growing. We had a GDP second quarter that was revised higher to 3%. The Atlanta Fed tracker for the third quarter is at 2.5%. You had pretty good PCE on Friday. And so I think all that translates into pretty good earnings. And so that's why I want to be adding to weakness if we get it.
You said you think this is going to be a bit of a choppy period. We always wonder how choppy it's going to be.
Yeah.
When you think about both the number we're going to get on Friday and also overlay the election, that's what we were talking about earlier in terms of, I said there was going to be, there's a sprint from Labor Day to Christmas. Joe said there's a sprint for 68 days with the sprint to the election in the middle. It's the intermission.
63 days.
It's the intermission of the of the big show. So how does that matter or not in your mind right now to how equities are moving?
Well, yeah, I mean, I think you are going to see some choppiness over the next couple of months. But again, if I look at kind of what the economy is doing, the economy has been resilient. I mean, this is an economy that just won't quit. And if you look at a lot of the data that I just mentioned, in addition to kind of GDP and the revisions there, you've had ISM services that have actually been good. The new orders within ISM services have been very strong. And the employment numbers, by the way, within the ISM services has been actually better than expected. I think Friday is going to be fine. I think we get, maybe we get a little bit of chop on the news, but I think overall we are growing. If we're growing 2.5% in the economy, earnings can actually be 8 to 10%. And you can see it broadening out. We are starting to see a broadening out in the markets, which is very encouraging, Andrew. I mean, this morning you've had a whole slew of upgrades in some of the banks. I mean, the bank sector, they're trading like 1x book, and they have
Nvidia's. We'll go back to Stephanie in a second, but Nvidia's down below 110. It is down the highest, the most it's been since April. Nvidia's down the most it's been since April, down 8% on the day, 109.90. Goodness gracious. So here's the thing. Now, tomorrow is going to be the most important thing. How the market closes will be important at 4 p.m., but tomorrow is going to be very important because if this is multiple red days in a row, then you're going to start to see a little bit of a trend. Given it's September, that doesn't help Nvidia's case of continuing to go down. But that's going to be a little bit of a trend if we continue to see red. If we see the dip buyers step in tomorrow and 109 kind of becomes a little bit of support, that'll be obviously good for the stock. But still, now it's going to be this game of who steps in first, right? Put in the chat if you're buying the dip. Put in the chat if anyone's buying the dip. I don't have I don't really have an Nvidia position, so it's not that exciting to me. My real dip I'm waiting for is Palantir at 25. If that happens again, that gets very exciting to me. That's where I step in and I don't, really think twice. But if you've been in Nvidia for a while and you really are bullish and you believe in the thesis, down 8% is theoretically when you're supposed to get excited, right? If Palantir was down 10% today, I would get excited. Maybe I don't go balls to the wall buying the dip, but I would at least buy something because you just don't know if you're going to continue to have down 10% days. But With Nvidia, it's different. With Nvidia, people already think it's way too overvalued. People think the forward PE is too aggressive. And therefore, I think people are going to be waiting to wait a little bit before they get excited for Nvidia. We got some people buying some shares. BSAW bought 100 shares at 111. Same for Palantir at 25. Yep, I agree. Stock Slayer says I'll buy at 95, not at 109. I have an average of 98 right now. Fund managers taking profits on Nvidia. Arnie says, yeah, I think this is definitely fair, dude. I think fund managers that are up a lot on Nvidia, they're looking at the risk, even though they know that the growth story is intact, and they're really thinking to themselves, hey, do I give my shareholders and my limited partners and my clients a return and solidify that return with a profit? Or do I get greedy and wait till we get 140 by the end of the year? Here's the thing. If you've got a good average on Nvidia, 40, 50, 60, 70 bucks, I mean, is the risk to reward for waiting for 150 or 140 or even 135 by the end of the year that much worth it versus like keeping your job and returning money back to your clients? You might have some clients thinking from that perspective, right? And that's why you also see a little bit of a sell-off here. But that opportunity, or that sell-off, might be an opportunity for other people that just haven't been able to establish a big position on Nvidia. How about selling puts on CleanSpark? I would not personally do that if you're asking my personal opinion. Again, and I don't want to take a victory lap here, but last week on the show, we really did talk about the Bitcoin miners versus the Bitcoin ETF, the 2x leverage Bitcoin ETF. BitX is down 3.78% on the day. That hurts. Down 4%. That sucks. CleanSpark's down 11%. So again, I don't want to take a victory lap here because Bitcoin, if it goes up, I think every crypto proxy is going to go up. So that's the underlying theme. Take my comments with a grain of salt. However, on this show, we had a decent, 15-minute conversation about how the miners have additional risk compared to the ETFs that are leveraged, that do have a form of daily dilution. You have to worry about the net asset value. I get it. But CleanSpark just diluted by $300 million. Bitcoin ETF is not going to do that. It's just going to be leveraged against Bitcoin. So I think for the miners, you just got to, unless you really believe in the miner thesis, you've got to be very careful because the premiums are going to be good. The puts are going to print, which is why if you sell puts, you're going to get premium. But the longer Bitcoin stays down, the more the miners are going to be in a tough situation. So I would just be a little careful engaging with the miners at all. Amit, look at oil prices. Yeah, so oil is down as well. Wow. Holy shit. Oh my gosh. I forgot to show oil this morning. We looked at it a little bit, but holy crap, guys. Look at that. Holy shit. It's about to go below 70 a barrel. See, this is why I think it's going to get exciting towards the latter half of the year because CPI is going, look at oil. It's at 70 bucks with WTI crude. If that goes to 64, 65, energy, which was flat last month, if we get a little bit of disinflation on shelter, we're going to see CPI at 2.5, 2.6. We're going to see CPI at 2.5, 2.6. It's already at 2.9. I'm pretty sure we get at least 2.8 by the end of September, if not 2.7. If energy keeps going the way it's going, you're going to get inflation coming down aggressively. And at that point, you're going to have to ask yourself, hey, if inflation's coming down and growth is still going up and rate cuts are on the way, that's a bull market. Growth up, inflation down, rate cuts, that's a bull market, along with earnings growth. And the final caveat is not having massive unemployment. Rates go down, inflation comes down, growth goes up, earnings or GDP goes up, which means earnings growth goes up, and we don't have massive unemployment, we're going to have a bull market, even if the rotation is out of Nvidia into some of these other names. But those are the metrics we got to look at. Palantir now below 31, $30.98. Tesla right here at 214 on the day. Benny says CleanSpark is down because people think they're going to dilute 100%, another 100%, even though they're not. Yeah, but see that doesn't matter, right? It's all about perception. If the CleanSpark executive chair has to make this Bill Ackman Twitter post on Friday to justify why people are reading the shelf offering wrong, then dude, you've already lost the game. Like you've lost public perception at that point. So now again, if you're a deep CleanSpark shareholder and you understand, oh, this is bullshit. This is like people saying Robinhood's responsible for GameStop, blah, 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 and that's why you're buying it, then all power to you, right? Because I could be an idiot right now saying that dilution is happening for CleanSpark, just like someone who, in my perspective, is an idiot if they're complaining about GameStop and Robinhood, right? So if you really know the company and you don't think dilution is that big of an issue and you think people are misreading it like I am right now, then yeah, if it's down 10%, then you continue to add to that position. But from my perspective, it does look like dilution is a problem if Bitcoin is not going up, because again, they're just not making that much revenue per Bitcoin given the cost to mine it increases. And so that's where I'm coming from, but I could be wrong on that. It's just a question of seeing where Bitcoin goes and then ultimately where that dilution goes. Visa's up a little bit. Robinhood recovering a little bit. Robinhood was at 1960. Now it's at 1982. MasterCard is up. Visa card is up. Ulta Beauty's up 2%. They fell about 5% last week. Dollar General's up 2%. They fell about 30% last week. Berkshire Hathaway is up. Eli Lilly continuing to gain momentum. So the street's betting on Ozempic. They're not letting go of Ozempic. And then Google right here at 159. Google down 2.62% on the day. Unity as well, up 8% right now. Where's Nvda? Nvda 110. So Nvda not falling below 110 at that 109 level, but still at 110.34 on the day. Jason is not coming on today, so we're not going to have Technical Tuesday. He'll be on Thursday. He's not going to be able to make it today, but Thursday we're gonna have Jason on, and we'll get through Technical Thursday. We do have some earnings today, though. We have Zscaler. That's an important cybersecurity name after the bell, so that's going to be important. And then we have outside of Zscaler, then we have another software name. We have GitLab, and then we have Asana. So important software companies, not like the biggest in the world, but these are names that will have a little bit of an impact on the market. And so we'll see how they perform today as well. VIX at 20%. VIX is up 20%. Is it up 20%? Yeah, there you go. VIX is up basically 16% on the day. VIX is at 18 right now. All right, so you got some volatility. Now, again, it's not like this type of volatility on August 5th. It's not there yet. But if you are trading futures on the VIX, I mean, congrats, you're up 16% a day. So, I mean, if you have short dated options on those futures, your options are probably up a couple 100%. But 16% up on the VIX today. Volatility continues to go higher, which is why the broader market takes a little bit of a decline. I'm surprised Robinhood's not down more. Yeah, me too. But the thing is, the broader market's not down as much, so that's why Robinhood's not down as much. I also think, dude, the street knows Robinhood's growth is going to be crazy this quarter. Like, I'm pretty sure they know that growth is coming. But, S&P falling 10%, you'll get Robinhood falling probably 20, 30%. And I think that would be a decent dip. So S&P right here, it's very close to being down 2% on the day, which would be one of the first negative 2% days we've seen since early August, if we get that. QQQ down about 465, down 2.18%. So that's officially down 2%. And then Nvidia right here, down about 7.8%. All right, let's go back to Stephanie, and then we'll keep going from there.
Have great dividends and they have good capital. And so that's a sector that I really like. Industrials, I really like, because you have this whole renaissance going on with onshoring, reshoring.
Right.
The consumer is choppy, mixed, but I think you have some winners and losers. Winners are Target, Walmart, and Costco. Everybody else, I think there are some issues there, but I think you can pick and choose.
Give me the tech AI story in your mind right now, because I think that there's still it feels like such a jump ball at this point.
I know. No, I mean, I don't think it's a jump ball. I think the stocks have actually had such a nice run. So it's hard to, the risk reward is not great. But I do think that you're still in very early innings. You've got a total addressable market of like $1 trillion. I thought it was very interesting last week. Marvell reported a good number, and it was their AI business was good, but it was their non-AI, the cyclical businesses that are starting to see a recovery. That's why I like Broadcom. I don't want to play it for the quarters per se, but I do think if you have AI and the AI orders are running up something like 200% for Broadcom, and then you have now the cyclical part, the non-AI business, which Marvell just told us was actually recovering. That business for Broadcom, their orders grew 30% last quarter. So I think that there are ways to play it. I think you definitely want to have exposure, and you want to use the volatility to be adding to those names.
We're going to hear from Apple about a week from yesterday, in terms of Monday next week, with their new product offering, the new phones and everything else. Do you buy into the sort of whatever you think the Apple move is going to be ahead of that? Do you wait to hear what you're going to see? Do we pretty much know what we're going to see?
Well, the stock is up 30% from May. And so actually I've been trimming Apple. I like it really a lot for the long term. But I do think that the expectations are a lot higher. I do think you are going to see a whole refresh cycle. But I don't know if it happens right away, Andrew. And while it might be exciting what we hear about, and for the long term in terms of AI and in the phones and the refresh, but I'm not sure we're going to get a lot of answers next week. And the stock has run quite a bit, so that's why I was kind of taking some profits. Everybody hated this thing, right, in the spring, and that's when I was adding to it. And so now people, are really jazzed up about it, and I think it's time just to take some chips off the table.
A little bit like Buffett, though. Buffett took him off earlier. Buffett actually took him off back in May, in fact. So he missed a little bit of that upside. We'll see where things land. We'll call you Mrs. Buffett this morning.
Buffett took his profits, and even though he might have been a little earlier on taking some of the profits, he took those damn profits. And then he took even more profits when he trimmed the other 50% of his Apple stake. I mean, he sold the first 13% when it was at like 170-ish, and then when it got to like 215, that's when he took off the other 400 million shares or something that he sold. Nvidia right here at 109. Nvidia is getting no support. Nvidia is getting zero support, bro. Like nothing. Look at this thing, dude. Every time it tried to gap back up, nothing for Nvidia. Just nothing. So Nvidia's in a tough spot today. I mean, it looks like down 10% is likely. Where is it? Down 7.82%. Yeah, we got a little bit of green candle right there. If the market decides to just dump it, down 10% day is not crazy. That would basically be $270 billion in market cap if we fall down 10% on Nvidia. Nasdaq down 2%. S&P recovering a little bit, down 1.3. It was down 1.47. CleanSpark now officially down 2%. This is the Bitcoin ETF miner, WGMI. So if anyone wants to just look at miners in a nutshell, that's down 7.26%. So that could be like a mining ETF to get a gauge on the mining markets. IWM down 2%. That one's still not playing out in terms of the thesis that you would expect. Wow, Robin in 1996. How does that happening? That's weird. Did Bitcoin go up just now? Is that why? But the miners are down, so I don't know why. No, Bitcoin's down 2.4%. That is weird. I would not expect Robinhood to basically be at $20 with Bitcoin down and with the broader market getting hit by 1%. Interesting. So looks like either algos or people, maybe, bigger investors stepping in and buying in a little bit of that Robinhood dip. Airbnb. So I'm going to be traveling in a week. You guys are going to see where I'm going in a week. And you'll see where I am, but I'll be doing the market open from a hotel in a different state in a week. And the reason I'm saying this is because I booked a hotel yesterday instead of an Airbnb. And the reason for that is because I looked at where I was going. I looked at the Airbnb prices. They were disgusting. I could barely I was like getting a room in a house. I had to share it with people. I was like, you know what? Let me just go to a hotel. I found a decent hotel, $135 a night, which is way better than what I was looking at the Airbnb. And I was like, why do it really dawned on me, like, why are people, if you're just staying for a couple days for like a work trip, why would you get an Airbnb? Especially if you're not sharing it with a lot of people, So I still believe Airbnb is a fantastic product. I think the valuation also is relatively attractive. But just my experience yesterday alone of booking a hotel versus an Airbnb made me realize, like, maybe it's not as indistinguishable of a moat as you would imagine, because that money that should have went to Airbnb immediately went to a hotel. And maybe it's because Airbnb didn't have enough supply that could list me something for $130 a night that was relatively cheap for where I'm going, and get my money versus going to a hotel. So I've stared at a lot of Airbnbs. It's not like I don't have experience with Airbnb, but yesterday kind of dawned on me, like, dude, maybe I should just like consider a hotel next time. HIMS, by the way, down about 1.73%. So HIMS also holding up nicely, because maybe hotels just aren't as bad of a value for your price when it comes to the value, when it comes to the bang for your buck that you're getting. Chris says price of the rental is $100, $200 cleaning fee. Yeah, that's also ridiculous. $100 service fee. It is very annoying. It is very, very annoying. Dude, the hotel I'm paying, it was 3 days, $467. It was really $460 in taxes. I could cancel in the next 10 days if anything happens. Like, it was a pretty good deal, dude. I booked it in a couple minutes. I was like, wow, this was very seamless. And You don't have to worry about getting the code from the person. And then like, you just go in and then boom, you're there. You're at a hotel. It's normal. I've stayed at more hotels than I have here. I've stayed in probably 300 hotels my entire life. Cause when I did debate in high school, I was traveling every single week and we were in a hotel every single week. So I've been in crappy hotels. I've been in really nice luxury hotels. So I've experienced with hotels. But as I got older, I was like, well, why don't I just like book an Airbnb with friends? But now I'm realizing, dude, like even booking a hotel with friends is not the worst idea in the world. JP Morgan, 222, TFC at 44, Costco, 886. Costco now trading at 54 times earnings instead of 57 for anyone that's excited about Costco. Dow Jones down about 1% on the day. Chevron's down. Yeah, the oil stocks, XLE, should be down like 3% today. Yep, there you go, 2.7%. I cannot believe oil might go below $70, dude. It's at $70.57. Wow. That is so interesting, dude. We didn't expect that when it was at $95 a couple months ago. But now it's down. No hidden cameras. Yes, also there's no hidden cameras. That's also very important. Is a recession coming soon? The answer to that question is totally based on September 6th. September 6th, we are going to know if we are having an aggressive recession. It really comes down to that September 6th jobs report, dude. If it's bad, then yeah, the market's going to price in a recession. If it's not bad, I think we're going to be okay. So that's what we're going to have to see. What's the latest on the Google antitrust news? There's no latest other than the fact that Google did lose. And now the DOJ is figuring out if they want to officially break up Google. One thing I will say, I was listening to a couple of podcasts over the weekend. It is going to be really difficult for Google to get broken up and have YouTube and Android and Google Cloud, et cetera, as like separate companies, because Microsoft never really got broken up. Microsoft struck a deal, I think it was early 2000, late 1990s when the DOJ said that they were a monopoly, to like just engage in non-monopolistic practices and to break off some parts of their business, but not like totally get broken off as an entire monopoly. And Microsoft was able to survive. So back when the DOJ prosecuted Microsoft and they ruled that they were a monopoly, they struck a big deal with them towards the end of that cycle. And Microsoft was able to maintain itself as Microsoft. So I think there's a world where the DOJ sits down with Google and they say, hey, you have to share more of the ad revenue, or hey, you can't inject your search engine into Apple's iOS, or all these different caveats. And then Google has to decide, do we like that deal, or do we just want to break up into YouTube, Android, Google Cloud, et cetera? And I think Google is not going to want to break up. I do not think Google wants to have YouTube as a separate stock, which, by the way, let me know what market cap you would give to YouTube. I put that question on Twitter. There was a lot of different responses. I personally think it would be double of Netflix, just given the growth and given the moat of YouTube. So probably 600 billion versus 300 billion. But I don't know if people want YouTube, Google Cloud, Android as separate companies. So I don't think Google gets broken up, but I do think that has some pressure on the stock right now, because obviously investors are scared that if that does happen, that would be not beneficial for them. 160 right now. Google trading at a PE of 21. It's the cheapest out of the Mag 7. Amazon's at 37 on the forward basis, and then Meta is at 22. Or 24. So Google is the cheapest, but it is cheap for a reason right now, given that DOJ lawsuit. Mark says 669 billion. That might end up happening. 500 billion. Yeah, I mean, look, I think it's worth more than Netflix, bro. I think YouTube has a moat that is so substantial. Again, the biggest problem with Netflix is that what if for a couple quarters they don't have interesting content? And if they don't have interesting content, YouTube is never going to have that problem. You get a decrease in subscribers and overall growth for Netflix. So I think paying $300 billion for Netflix is a bit much right now, given the risk of them not having good content is very real. Whereas YouTube, I don't think that risk is ever going to happen, because it's a search engine at the end of the day for people to upload content around a variety of topics. But nonetheless, Netflix does put a premium on the content they serve. It's just, if that content's not that good for a little bit, you're going to get a little bit less growth than you would imagine. Nvda now 110. So Nvda getting a little bit of a green candle, recovering right there. Tesla is still green, 214. Shopify 72. Walmart green on the day, 77. But Nvda, the story of the day, down 7.15% right now. Maybe oil is anticipating a recession. So maybe, because if people stop traveling, if people stop going on airplanes and vacations, then there's less demand for oil. So you could argue that WTI futures are pricing in or trying to price in a recession. One argument is that if Trump gets elected, there's going to be more people drilling, or more companies drilling. Trump's going to unleash more drilling, which I'm skeptical of because the United States already is drilling so much. So I don't know how much more he can, but maybe like Keystone Pipeline, the Alaska Pipeline, there's all these different things he can unlock, which means that would create more supply, which would not be a demand issue. It would just be prices go down because there's more supply in the market. So that could be one thing that the markets are pricing in, even though that's kind of weird though, because I think it's a little too early to price in a Trump victory already. But that's one argument. The other argument could be that, hey, maybe they're pricing in a little bit of a recession. But again, that jobs report is going to determine pretty much everything. Sam says market is de-risking for Friday. It's a buying opportunity. Yeah, I think so as well. I think up until Friday, we are going to see some volatility. And then on Friday, we're going to see kind of how bad this plays out. Okay, let's get an update from the former SEC chair and what he thinks about Kamala's policies on taxing unrealized gains. I know some people agree with it, some people disagree with it. Let's get a perspective from someone who used to run the SEC and see what he thinks the impact will be on the broader markets.
Talk about so many different issues, including the presidential candidates' economic plans. Also, the anti-DEI backlash taking place by some big U.S. companies. You can add Ford and Lowe's to that list. Last week, they said separately they're going to be scaling back some of those efforts. Also want to get into Elon Musk and what's taking place in Brazil over the weekend. And if you'd indulge me, where I actually want to start talking about the economic plans is a video that went viral last week where Joe and Becky had an opportunity to interview Elizabeth Warren about unrealized tax gains. And that has caused a lot of consternation on all sides.
Well, this is one of the worst tax ideas that's floating around. And it's one of the worst tax ideas, not in the abstract, not in the academic halls, but in America where we have had a different dynamism. The ability, the flywheel of capital and talent and technology going on, that is driven by our tax system, by the willingness of Americans to take after-tax dollars and invest them in risky ventures that may not pay off for years.
Okay, so I happen, as you know,
there's more.
We don't disagree about this issue as it relates to unrealized tax gains.
Do people think there's like a technology fairy?
No, but my question to you then is, assuming we're not going to do that, and by the way, one of the reasons that that's even put forth is a view that if you don't put something on the table that's taxing those gains annually like this, and if you were to put something out there that said, you can capture the gains later, that potentially a different party, a Republican Party or something else would get into power later, undo whatever the policies were to capture the gains properly in the future, and therefore you'd actually never capture any taxes. My question to you is, how do you feel, for example, about and
that's such an ivory tower?
Well, no, but there's a practical reality to it, which is we haven't dealt with those folks who take loans, as you know, against their unrealized gains and effectively have those gains. Should that be taxed, for example?
You know what, Andrew? Something like that, where someone says, "Okay, I'm going to take a loan against and I'm bringing forward my realization of those gains." I'm very happy to look at that. That's a very narrow issue. Okay. So I'm very happy to look. That's a discussion.
How would you feel about dealing with step up at death? If you do, because all of these things have a huge implication on the system, which is to say, if you dealt with step up at death, right? If you dealt with this loan issue, you take the incentive away for those things to happen, and therefore those things would get taxed in a way that are somewhat considered proper. If you dealt with carried interest, I'm saying there's low-hanging fruit here.
Okay, but we're talking carried interest. We're talking about something that scores at $40 billion over 10 years or something.
And therefore you wouldn't do it?
No, I'm just saying that those discussions I'm happy to have. This idea that we're going to take this fundamental American and uniquely American system, the one that has lifted the entire world out of the COVID malaise because of technology, because of our investments in energy, we're pumping 40% more gas than we did when Trump took office. We're pumping a third more oil. You know why? Because we invest in the technology to make that happen.
But here's the issue. The reason why that proposal, this unrealized gain proposal, has any oxygen at all, I would argue to you, and as you know, I don't subscribe to that policy, but the reason it has any oxygen is because the Republican Party has not provided any oxygen to the low-hanging fruit issues. the step up at basis, at death, the issues around taking those loans, the issues around carried interest. If those things were taken off the table, we wouldn't even be having these conversations.
I don't believe that for a second.
No,
this is
that
all
wouldn't
about
satisfy
pandering to the idea that the wealthy don't pay their fair share. That's how this is cast.
We're never good enough.
And it's let me give you two other things that bother me about this that you're not hearing. One is this incentivizes the government to create inflation. If you're going to tax the gain in a price,
right?
Prices go up when inflation goes up.
Smart point.
So the government is incented to increase prices. And look, if something goes from $100 to $200 because of inflation, you haven't gained anything. But you're going to pay the government.
The real viral nature of that discussion wasn't so much on the unrealized gains; it was on price controls and just the notion.
Joe, that's my other point. What are price controls? They're the government setting prices. When you're taxing unrealized gain, who decides the price? Right. I mean, we have a market price in the market, but
immediately
the government does.
They because of the backlash from the right and left, they immediately tack to say that it's not about price controls; it's an anti-gouging.
That was nonsense.
I know.
But
what it really was a way to try to deflect what caused the inflation. And you can say it was a pandemic and reopening. You can say whatever you want. But there was definitely some fire or some fuel thrown, some gasoline thrown on the post-pandemic environment from all the stimulus.
And I heard your interview with Elizabeth Warren. It was fantastic. One of the things that she always fails to recognize is that markets are more competitive today than they ever have been because the ability to look at prices. You know, I can look at
the internet.
The internet on my phone. I'm driving down the highway. I can look at the 5 gas stations that are within 30 miles and go to the lowest cost one.
So very interesting. And I agree with you when it comes to gas stations.
Mm-hmm.
I don't agree in the same way about supermarkets. I'm actually curious where you land on that because the supermarket space is becoming increasingly consolidated.
Mm-hmm.
There's a real question as to what the pricing that's happening at supermarkets really is. I think by the way, there's been a lot of idiosyncratic issues. Joe brought up with Elizabeth Warren the issues of the real issues around egg pricing and other things. But having said that, the consolidation of the stores themselves has made pricing a more complicated topic. I think that's
for supermarkets. There's still.
I looked at this because you made this point last time I was on.
It's Walmart and Amazon now. I mean, Kroger and Albertsons. That's not where the problem is.
Well, that's the question.
And the Costco's.
Right.
I mean, you go out to the we shop at the Costco in Brooklyn.
Yep.
It's an unbelievable. I mean, the amount of volume that gets driven through there, therefore driving prices lower, and the amount of people who are there shopping, you know, it is remarkable. I looked at the inflation around grocery stores pre-pandemic. The prices were coming down for the
If you enforce monopoly laws and antitrust laws, doesn't the market take care of someone trying to gouge?
Well, that's what we hope.
Immediately.
And the question is whether we are.
Let me tell you the industries that bother me where you can't see prices.
Instead of actually
education.
Right.
Education,
healthcare. We can go through the list.
They're the ones where government is involved.
Andrew, instead of
So let's ask this question. That clip had like 10 seconds left. But here's the question, right? The one thing I think they forgot to mention in that clip, and that a lot of people forget to mention in this discussion, is that the unrealized capital gains tax, which is the thing that really matters that they're talking about, applies to people that are worth $100 million or more, which means if you're worth less than $100 million, Nvda going a little bit green right here at 111, that's not going to affect you. So that's my question for the chat. Do you think that an unrealized capital gains tax set at the threshold of being $100 million or more in net worth to be triggered, does that disqualify people? Should that disqualify people from caring about the what some would argue egregious nature of that tax policy in terms of taking away your unrealized capital gains? Or is it fair to tax people that have had so much wealth in America to the tune of 10% of $1 billion that it's worth engaging in that type of policy? What would you guys say? I have my own perspective on that, but let's do a poll. Let's just do a poll in the chat. Let's do a poll. What do you guys think? So the question is it okay to be taxed on unrealized gains if you are worth 100 million? Let's see what people think. Because I think that's what everyone brings up in the discussion. Well, oh, it only matters if you're worth 100 million. You know, there's perspectives to the downside and the upside on that. But I think that's the part that's missing from a lot of these discussions when we think about unrealized capital gains. Like you're not going to get taxed if you're making 20,000 or 100,000 or even 2 million a year from the unrealized gain perspective. But the downside is if they're getting ready to tax people at 100 million, 10 years from now, do they lower that to 50 million? Do they lower that to 25 million? And then, what if you end up having some decent success in your life and you get closer to that threshold? And that's where it gets into a little bit of a slippier slope, which I'm personally not the biggest fan of. All right, we got 84% say no, 16% say yes. So what's interesting about this? What's interesting about this is that I would say the majority of people in the chat, outside of a few whales, we're all probably, there's 1,420 people here. I would say, about 1,418 of us, there's probably 2 people here worth 100 million, are not worth 100 million. But this poll is the majority of people saying we still shouldn't tax those people. And what that tells me is that there's a certain level of American dynamism, even if you're international watching this right now, and entrepreneurial in spirit, that basically says, hey, I think one day I will be worth that much money, or I'm at least in the pursuit and obsession and strive to get to a certain level of economic prosperity in my life. That makes me feel uncomfortable with the idea of taxing people that could one day become myself if you're worth $100 million. And I personally am a fan of that mentality. I like that mentality. I think that mentality is very important. I think if we get rid of that mentality, that is downfall of taking risks in the country. But I also understand the people that think, you know what, $100 million is just too much money and there's no need for people to have that money. The only thing, I would have more sympathy for the people that said yes in the poll if it wasn't unrealized capital gains. If it was just a higher tax rate, I would have more sympathy. I'd be like, you know what? All right, fine. I guess I still wouldn't like it, but I would understand it. The fact that it's unrealized is the part that's just, it sits sour with me no matter how much you're worth. Because that's the part where it's like, oh, you're really going against American meritocracy by taking money from people that haven't even realized the gains yet, But it seems like the far majority of people believe that you should not be doing this, at least in this poll. Again, this poll is different. We have 1,400 people here. The broad country might think capitalism's not working for them, and they might end up getting excited to tax people that are worth more than $100 million for unrealized gains. And in November, we're going to see how the hell this plays out. We're going to see how this plays out in November. One thing I think we can all agree on, as Star Buccaneer says in the chat, it's not good for investors, dude. Like, you're going to have less people putting capital into the equity markets if they think that they don't have the ability to maintain the gains from that capital. Also, again, here's one more point on why taxing at $100 million still is not the best idea. Those are the people that are contributing a lot of money to the economy. I mean, you buying 1,000 shares of Palantir doesn't matter as much in the grand scheme of things of someone who's worth, $1 billion buying 10 million shares of Palantir. I've spoken to people who have 10 million shares of Palantir. They send me their portfolios. They're up 80 million in a day. Like, I've seen those numbers. And I'll tell you, it's motivating as shit. When someone sends you a screenshot and they're up $80 fucking million in a day, it's very motivating. And I've also spoken to people, obviously, that have a couple thousand shares of Palantir, right? And so, you need people that believe that if they buy Palantir at $27, it one day will go to 40, and they're not going to have to pay the difference between 40 and 27 before they sell it for $40, force the Palantir stock to go up, right? For any stock to go higher. You kind of need that momentum and that excitement of the broader investor to feel that it's okay to buy a stock and not get killed if the stock goes up because you have to pay capital gains tax. So I think that excitement is what you want to maintain. And if you don't maintain that excitement, we could see less enthusiasm overall in the markets. But that's what we have in terms of Kamala, and we have Trump. All right, 84% say no on this poll, so it seems like the far majority of you are against it. What else do we have here? Taxes do fund spending at the federal level. They are all deleted upon receipt. All this conversation is total nonsense. Well, I think it's a question of your philosophy on taxes, right? And I think there's going to be two different paradigms of thoughts going into the election, and one of those paradigms is going to win. One of them is not going to win. Income tax started with people who are making $100,000. Yes, it ends up being a very, very slippery slope. The income tax started, I think I could get the history wrong, but it was like 3% of your income. And it was like is like in the 1850s, I think is when it started, because they had to finance some of the wars that were going on. And then obviously we've seen the progressive nature of how income taxes have gone. Ask Arnie why there are practically no innovative companies in Italy. You know, Arnie and I had this conversation when we were at AIPCon. We stayed up all night talking about this very thing. And Arnie was like, dude, like Arnie, first of all of you guys know Arnie. Shout out to Arnie. I'm going to put his Twitter right here. If you guys aren't following Arnie, make sure to follow Arnie. One of my best friends in this content creation game, Palantir world that we're in. We're actually hosting a Twitter Spaces tomorrow. So tomorrow, Arnie and I are hosting a Twitter Spaces with Palantir's head of energy. So make sure you're there. I forgot to mention this, but Palantir head of energy, 11 a.m. You know what? I might just stream it on the Spaces, on the YouTube stream. So we might just keep the YouTube stream going as I'll just put the phone near the microphone and we'll listen to it. But Arnie, he was telling me he's a full-time content creator, and in Italy, that's looked down upon because he's taking a risk. He's making content. He's investing. He's doing an unconventional path. And in Italy, he gets a lot of shit from people because all of them frown upon the idea of being a risk taker. Whereas in America, I mean, you tell people you're a content creator, you know, it is whatever, but there are more people than not that will say, oh, go for it. Like chase your dreams. Whereas in Italy, they'll be like, you know, they'll be like, what the fuck is wrong with you in Italian? So it is a different world. And that unique culture in America is something that I think we have to protect at the end of the day. So again, Matt Babin, the head of Palantir Energy, I got a chance to talk to him at AIPCon in June. He'll be joining us on Spaces with Chad and Iliano and Arnie tomorrow at 11 a.m. So this will be a fun discussion. We'll get to go deeper into where Palantir's energy business is ultimately going as well. All right. Andrew said, sorry, you had to go away. Is jobs data out yet? Jobs data will be out on Friday. You have to wait until Friday. So Friday, I'll be up at 8:20. We'll see what happens with the jobs data, but it's going to take a little bit of time before we get the answers that we're looking for. It's going to be a couple days. Let's finish up that deep water clip and then we'll end it out. But here's the final couple minutes of what Gene had to say about Apple and where tech is going throughout the rest of September.
They're as good as I believe. I think these are going to be features that when consumers see them, they will view them as must-have. I just want to put some quick context into the sensitivity around the numbers. Is that the iPhone upgrade cycle, it's typically a 5-year upgrade cycle. If the cohort that is supposed to upgrade in calendar 26, so call it a year out, if 10% of those decide to upgrade in calendar 25, that takes iPhone growth to 15%. The street's currently looking at 7%. I asked the question about, you know, how big are these features? How do you feel about them? I think consumers overwhelmingly are going to embrace these features. It may take a few quarters, but I think you're going to see meaningful upside to Apple over that period.
Gene, I am super excited about it. I just don't know if I'm representative of the common man. I like to think I am. But Gene, here's a separate question. Nvda, at this point of the ball game, what inning are we in for them?
I think we're in the third inning, and that ultimately, I think that there was a misunderstanding of what happened with guidance. They guided up by 2.5% for the October quarter. Previously, when they guided for the July quarter, they guided up 5%. So there's this narrative about this deceleration. But keep in mind that Blackwell slipped. They didn't use that language, but clearly, if you go back and look at the transcripts from 2 quarters ago to the July quarter, it slipped by 3 months. That's $3 billion, they said, several billion. You factor that in, NVIDIA would have raised guidance by 12%, not 2.5%. So I think this is still very early. We own NVIDIA at Deepwater. We think that it is still reasonably priced at 35 times and can grow faster than what the street thinks next year. And in 2026, ultimately, the risk for big companies not to invest in this is just too high. NVIDIA is going to be a big beneficiary of that.
You know, that's interesting. I didn't know that the Blackwell delay caused their guidance rates to go from 12% to only 2% up. If that's the case, dude, that means the Blackwell delay had a tangible impact in terms of numbers. And that means that when they do officially get Blackwell into production, shipping out by Q4, that might be a real catalyst that the street is not expecting. And that might help them get to that $1, $125 of EPS per quarter starting in Q1 2025. All right, that is it from me, folks. Thank you for joining. Let's end out the stream by just taking one quick look at the markets. We got NVIDIA at 111, a little bit of a green candle, touched 109, now at 111. Google down 2%, Amazon down 1%, Meta down 1%, Netflix down 3.2%, Robinhood 1985 down 1.1%, QQQ down 2%, S&P down 1.28. Palantir is just at $30.98, down 2% on the day, but still holding 30. And then the broader S&P down about 1.27% on the day. It's a red day. We'll see how red it continues to get. If we get a little bit of reversal towards the end of the day, we will be back on the market close at 345. We have a bunch of earnings to look into. And we'll see how September ultimately starts out. Word of the day is hangry.
Hangry.
Feeling irritable or irrationally angry as a result of being hungry. All right. So for those that have not had breakfast yet or dinner, if you're across the world, I'm sure some of you guys are getting hangry. So get some food. Hopefully you guys have a good day. It's Tuesday morning, back in the markets. Let's see what we got going on for the month of September. And we'll keep going from there. I'll see you guys on the market close in about 4 hours. Bye, everyone. Have a good one. See you guys in a little bit.